So now tell me, what is the chapter we are going to start with? Dividends. With regard to the dividends chapter, totally how many models are there? 5. 5 concepts will be there. Concept number 1 will be called as Walter's model. Concept number 2 will be called as Gordon's model. Concept number 3 will be called as two-stage dividend model. Concept number 4 will be Modigliani-Miller model, and last one will be Linter's model. From these 5, whatever I have written here, from these 5, one question will come in examination. Okay, the weightage of this chapter is 6 marks in exam. Okay, 5 marks minimum, 6 marks maximum. Beyond that, this chapter will not come. But very important chapter, because easy area, small area, but confirm 6 marks will come from this. Clear? You do a very big ocean like ratios, will come for 8 marks. We do a small chapter like dividends, will come for 6 marks. Means obviously this will come under the power play. Failures are not there, but marks are heavy. Clear? So these are power play chapters, all these are. So these are very easy scoring in a level of time. Means you need not put lot many formulas in mind, just there are only 5 concepts, 4 formulae or 5 formulae maximum. If you remember, you can complete the chapter. No? Listening? 6 marks is a cakewalk. Once you understand the concept clearly and do. See here. What is this formula? Read. K equal to D plus R by KE into E minus D whole divided by KE. This formula is for whom? Walter. First point number 1. What is P? Price of the share today. D. Dividend. R. No, listen. This only I have to tell you. Walter says like this. Whether profits will come or not, we don't know. But once the profits come, okay, once the profits start generating in a company, we are having 2 options. Number 1, declare the dividend. Number 2, retain the profits. One is declare the dividend. Second one, retain the profits. What do you mean by retain the profits? What do you mean by retain the profit? We are declaring paying dividend or we are not paying dividend? Okay. Which is correct? Whether to pay dividend or whether to retain the profits? Everyone. Which is good? Declaring dividend is good or retaining them and not declaring is good? Which is good? We can't tell. Therefore, Walter said like this. You can tell that if you give me 2 numbers. They said, look at your R, look at their KE. What I said? Look at your R, look at their KE. What do you mean by look at your R? Let me tell you. See here. R, return on investment. Repeat. Return on investment. Also called as a rate of return to the company. Also called as a rate of return to the company. Capital budgeting la NPV, have you heard? IRR, have you heard? IRR, ERA. This is R. Clear? R. Okay? So remember properly. Normally, capital budgeting like chapter, do you know how many hours I teach regular? If anyone is there, your friends, you can ask 69 hours. Why? Capital budgeting is a king of the FM, yeah. If you understand capital budgeting properly, you will understand entire FM. Because the crux of all interest rates, return percentages, IRR, NPV, all these concepts are the source of financial management. So when you spend lot of time on that, you will get lot of clarity on the concepts of capital budgeting. But we will cover all the concepts in the little time available. Clear? But listen carefully. R, return you are generating. KE, return they are expecting. Return you are expecting is called as KE. I am giving is called as R. Return on investment. Return on is called as what? R. Required return is called as what? KE. What shareholders require? KE. What I am giving? R. It may be lower, it may be higher, it may be equal. Correct or not? They said like this. There can be 3 situations. Use your common sense and tell. First case. First case. Read. What is the first case? R greater than KE. Means what? What company is giving is more than what shareholders are expecting. What shareholders are? Now you tell me. Easily try to understand. I am R. You are KE. Until you are public, I am company. Listening? If 100 rupees I keep on the bench, if I give it to you, let us say KE is 12. Let us say KE is 12. Tell me. You will expect 100 rupees I kept today. 1 year after, you will expect 100 to become how much? 100 to become 12 rupees. You will expect 100 to become how much? But if you keep it with me, I will make it how much? Now tell me, wealth is maximized in whose hands? Company's hands or shareholders' hands? What is the motive of financial management? Profit maximization or wealth maximization? Wealth maximization is our motive. Tell me, 100 is the wealth today. It will become 116 in my hands. It will become 112 in your hands. Tell me, wealth is maximized in whose hands? Therefore, he said, keep it with the company only. 100% retention, 0% payout. Understood the logic or not? This is indifference. You may do, you may not pay, nothing will change. Listening? Third category. Now you will tell. This is 16, this is 12. Change the example. Tell me. In your hands, 100 will become how much? In my hands? In whose hands it is increasing? Shareholder. Therefore give it to them. Therefore what to do? 0% retention, 100% payout. That is the answer. Over. Understood the point clearly? That's it. What? Yes sir. Write down. Over. Walter model. We have to do problems now. Understood the logic, everyone? I tried to explain what I normally teach in 45 minutes, just in 5 minutes. What is the idea behind Walter model? Tell me the names. P, price. D, R, return on investment. Okay, K, cost of equity, also called as capitalization rate. Also called as what? Capitalization rate. Do you know why the name capitalization rate came? Persons who gave the capital rate expected by them is called as capitalization rate. Listening? That's why name came like that. E, no, E means earnings per share, not earnings. E is not earning, E is EPS. D, DPS. KE, cost of equity, capitalization rate. Anything you can do. Write down the notes properly. Okay. If you are done, I will go into the next one. Which model we completed now? Which model? Walter's model we completed. Exam point of view, okay, what is required, that only I cover. Listening? What is the real idea behind Walter? That takes a lot of time to explain because this formula has a derivation. Also, how to understand the derivation is a subject matter. So that all I did not do. Exam look question come. At this time what student expect and come? I don't want extraordinary knowledge on that. I am not having any clarity. I want to write exam, get that 40 plus out of 50. Clear? If that be the intention, this is enough. Okay? See there. Formula everyone understood? Remember? In exam what they will ask? Let me explain. In exam, 2 types of questions will come. 3 types of questions will come on Walter. Number 1, valuation of a share as per Walter model. And to use this formula and do. Listening? They will give a data. That data is called as a contrast data. Contrast data means R will be 16 in the question. KE will be 12 in the question. What company should do? 100% retention, 0% payout. That's what company should do, correct or not? But the question they don't tell like that. Company's R is 16, K is 12, company will be paying dividend. Company will be, now tell me, price whatever you calculate will be optimum price or not an optimum price? As per Walter model, you will get the best share price if you go as per the model. If R is greater than KE, don't declare dividend. 100% retention means technically to understand D should be 0. D should be 0. But what question will tell? Question they will tell, though R is greater than KE, company is following a payout ratio. Company is following and a company is following Walter model or not following Walter model? Not following the Walter. When you don't follow Walter model, you will not get the best price. Clear? Then they will ask, to get the best price, what we need to follow? That's the second question they will ask. First question is, R KE data they will give. R can be greater than KE, R may be less than KE. Actually, R greater than KE means what ideally we should do? 100%. But in the question they don't do that. They will pay. Means you will get optimum price or suboptimal price. Suboptimal. To get optimum price, what to do? Follow the model. Listening? Two questions are. Third one, they will ask missing figure calculation. Asal mana CA syllabus ki the fancy thing is missing figures. That's why even in the yesterday's class also, whatever you do, wherever we have done the questions, what is the most important thing we have done? Missing figures, missing data. Something will be missing in the question. That's the next way. Listening? These are the three kinds of questions they will come. Next one. Keep the heading Garden model. Most important one in the chapter. Garden model. Two branches. If data with respect to retention ratio, payout ratio, return on investment or return on equity is given. That means in the question, retention proportion, payout proportion, return on investment, return on equity, all these are given. Then use this formula. P naught equal to E1 into 1 minus B whole divided by KE minus BR. I will tell the meaning. First write down. If data is incomplete, D1 by KE minus G. Completed? First, tell me one by one, what is P naught? What do you mean by P naught? Simple question. Current market price. E1, earnings expected in the next year. Earnings expected in the next year. Clear? B means, listen, it is important. B represents retention proportion, not retention amount. 10 rupees is the EPS. 10 rupees is the EPS. 4 rupees paid. What is the 4? Payout. What is the 6? Retention. Tell me, what is the EPS? 10. What is the DPS? 4. What is the retained earnings per share? 6. Listening? Okay. Now tell me. What is this? Payout. What is this? Retention. Payout proportion is 40% or 0.4. Retention proportion is 60% or 0.6. Like this you have to understand. Listening? B represents what? B represents what? Retention proportion. Retention? Okay. Now you answer. 1 minus 0.6 equal to 0.4. What is 0.4? Payout. Earnings is how much? 10. Payout proportion is how much? 0.4. Dividend is how much? 4. That's how the numerator came. That itself can be written as a dividend in the numerator. Hey, listening or not? Instead of writing as E into 1 minus B, otherwise how to write? D1 by KE minus G. Listening or not? Okay. Now tell me, what is B? What is B? Retention amount or retention proportion? Retention proportion. B is, in our example, how much is a B? 0.6. B is not amount. In Saljapalli, B is not amount. B is what? Proportion. You should tell in points. B is how much? 0.6. 0.6 is B. Okay, 1 minus B means? Payout ratio. B means retention proportion. 1 minus B means payout proportion. If you multiply earnings with payout proportion, what you will get? Dividend payout you will get. What payout you will get? Dividend payout. Okay. Divided by KE minus G. Sir, BR you have written, G you have written. B into RA, G. Another name for B into RA is G. Listening. Okay. Now tell me, what is B? What is B? Loudly, what is B? Retention proportion. See, I will explain you this way. Maybe you can understand much better. I will give you an example. Let us say company made some profit. Okay? Company made some profit. From this profit, listening, I paid some amount as a dividend. What is this called as? Retention. This I will put in dustbin or invest. Answer. When I invest, this 1500 will be 1500, it will grow now. No? Answer. 100% amount is 3000. Listening, totally how much is it? 3000. 6 notes. How much? 3000. In that 3000, I paid how much as dividend? 1500. How much is still there? Loudly. This 1500 I will put in dustbin or invest. Once I invest, this 1500 will be 1500 or this will grow. Answer. Grow. Now you answer my question. Totally 100%. Totally 100%. How much kept aside? Tell in percentages. How much I kept aside? Still how much is there? This 50% amount, whichever I have, I will put in destiny or reinvest. Answer. Reinvestment will generate return called as R. This 50% being 0.5 will generate R return, that's called as a B into R.
Yes, sir.
Understood the point clearly? Yeah. So beyond this I can't tell at this moment. Everyone understood the concept clearly?
Yes,
so tell me, what do you mean by B into R? What do you mean by B into R? Growth. B into R represents what? Growth. Very good. Next. So tell me, P naught. Start again. P naught. D1. Expected dividend. KE. Cost of equity. G. Growth rate. Growth equal to what into what? Retention proportion into return on investment or return on equity. Anything is okay. Listening, return on equity. B into R equal to G. What is B? Retention proportion into return on investment or return on equity. Clear everyone? Can you do the problems now? Everyone, can you do the problems now? Start. Come to the practical questions on dividends chapter. How many questions are there in the study material? 9. All the 9 we have to do now. Okay? One by one we will do. Come to question number 2. Come to question number 2. See, the following information is supplied to you. Total earnings 2 lakh. We want total earnings or we want earnings per share? Okay. Number of equity shares 20,000. Dividend paid 1,50,000. Price by earnings 12.5. Applying the Walter model, analyze whether company is following an optimum dividend policy. This is a theory question. First bit, tell me. Did the question give you RKE? See there and tell ya. Did the question given you R and KE? Did the question give you R and KE? Yes, they have given hidden information. That's why missing information I told her is a classic example question. Shall I do? First, keep the heading practical question 2. Okay? Practical problem number 2. Yesterday, cost of capital chapter, do you remember? Tell all the formulas of KE. KE equal to D by P. Next, KE equal to E by answer over P by E equal to 1 by KE. 1 by KE equal to P by E. P by E ratio given in the question 12.5. 1 by P is the KE. Yes, sir, over. That's it. One line la answer is over. We need to understand that clearly. Did you understand what I said now?
Yes, sir.
Tell me. KE equal to E by P. This is E by P or P by E? P by E. Loudly. So 1 by P by E ratio equal to K. Equal to K. Listening?
Yes, sir.
So 1 by K. This is KE. Correct? E by P is what?
K.
E by P is what? KE. Can I call this as KE?
Yes, sir.
1 by E by P means 1 by 1 into P by E. Correct or not? So instead of writing E by P, I can write it as what? KE. So P by E can also be written as 1 by KE. From the exam's point of view, at this moment, please do remember that first. Okay? Write down there the formula. KE equal to 1 by PE. Example question comes, PE ratio given, KE not there in the question. What to do? 1 by PE ratio will be the KE. Understood how this came?
Yes, sir.
Tell me. KE equal to 1 by 12.5.
8%.
8%. First bit over. Working note number 1. Whether to tell optimum dividend policy is followed or not followed, we need to have two numbers. One is R, another one is KE. What is there with us? KE. Now what we need to do? R. How to do? Listen, write down there. ROE. Okay? See here. EPS equal to BVPS into ROE. ROE equal to EPS divided by BVPS. BVPS means book value per share. Right now. Book value means par value. Listening? Book value means what value? Par value. Market value means market price. Are you listening?
Yes, sir.
So, in the question you see and tell, fast, don't sit idle. What is the earnings? What is earnings and a calculator? What is earnings? 2 lakh. How many number of shares are there? 20,000. So, what is the EPS? 10. 10 divided by, what is the par value of each share? 100. Equal to 0.1 or 10%. See, answer is over. Okay, na?
Yes, sir.
Shall we continue? Now tell me. ROE equal to what is the formula? EPS by BVPS. EPS by? Do you know what do you mean by BVPS? Full form? Do you know what is book value? Nothing is given in the question. Nothing is given in the question. Book value can be taken as a par value. Book value can be taken as a. But in the question, if they give reserves and surplus, equity share capital plus reserves and surplus will make book value. Will make divided by number of shares will give you book value per share. Listening everyone? Tell me, what is book value? Equity share capital plus reserves and surplus is called as book value. That divided by number of shares, book value per share. But the data is given with reserves and surplus means we will add reserves and surplus. Here given or not given? Not given. Therefore, what we need to take? Only book value of equity shares we will take. Listening? So 100 we have taken. Nothing is said in the question. Par value is the book value. If reserves is given, add reserves to the capital and then divided by number of shares. Listening? What is the other name for book value? No. In this question, par value. What is the other name of book value? We call this equity. Not equity share capital. Ratios chapter we call this owner's equity. Proprietary funds. At least did you understand what I said?
Yes, sir.
Clear, understood?
Yes, sir.
So tell me, what is book value? What is the other name for book value? Equity. Equity share capital, equity. Equity. As an equity shareholder, two things belongs to you. Number one, your capital. Number two, reserves and surplus. Therefore, both are called as a equity. Listening?
Yes, sir.
Now see. Tell me, what is the formula I said here? EPS equal to BVPS into ROE. BVPS into ROE. Now I will ask you a question, tell me. What is ROE? Return on equity. Do you know return on investment formula? Return on investment formula, ratios chapter. Return on investment. Return divided by investment. Return divided by? Now you tell by using common sense. Return on equity formula. Return divided by equity. Return divided by. Now use common sense again. Return. Debenture holders. Listen to my words. Though time is not there, I am explaining concept because you should remember this formula. 4 or 5 times exam question came. So please listen. Debenture holders want which return? Sales, contribution, EBIT, EBT, EAT. Why EBIT? From that only they will take interest. Correct or not? Very good. Likewise, equity shareholders want which return? Sales, contribution, EBIT, EBT, EAT. Everyone? EAT. Loudly. So, return can also be written as EAT. Divided by what? Equity. What is another name for equity? Book value. What is another name for equity? Book value. I will divide both numerator and denominator by number of shares. By? Tell me. EAT divided by number of shares is called as what? EPS. BV divided by number of shares is called as what? BVPS. That's how this formula came. Understood the point or not? Just I am telling you, you should remember. That's why I am insisting on remembering the formula. Everyone understood now? Okay. Now listen. So you tell me R equal to EPS divided by BVPS. What is EPS? 10. BVPS 100. How much percent? 10%. Now you tell me. Look at your R. Look at their KE. Tell me. R 10%. KE 8%. Which situation this is? R greater than KE. What we should do as per Walter? 100% retention, 0% payout. But what the company is doing? Dividend they paid almost. Correct or not? So tell me, whether company is following optimal dividend policy? Right here itself, no. This much things you need to write in exam there. Understood? Next. What is the bit number 2? Hey, read. Compute the P ratio at which dividend policy will have no effect on the value of share. Tell me, when the dividend policy will not have any effect on the share? R is equal to K. R is? How can you prove that? Yeah? When R is equal to K, there is no impact of dividend on share price. How can you prove? Batti kottadu concepts ne. How you know? How can you prove? When R is equal to K, dividends will not have any impact on share price. How can you prove? Silence. Because you just remember the concept somewhere. Correct or not? But that's not the way. Listen. Everything should be associated with some proof of understanding. Formula P equal to. Say, Walter formula you tell. Yeah, why you are sitting silent? D plus R by K into K. Correct? Okay. Now you tell me. In the formula, D is there or not there? D is there or not there? Therefore, dividend impact share price. Therefore, dividend impact share price. If R is equal to KE, let us say D plus, when R is equal to KE, R 10, KE 10. 10 cancel. How much? 1 into E minus D whole divided by KE. P equal to D plus E minus D whole divided by KE. Minus D plus D cancel. P equal to E by KE. DA formula not there. Therefore, dividend don't impact share price. That's the real meaning. Understood the point or not? Then dividend impact doesn't affect the share price, no? Because dividend word is not there in the formula. Listening? That's the meaning. Dividend will not impact the share price. So tell me, dividend should not impact the share price. Means what should happen? Dividend should not impact the share price. Means what should happen? Many times I should tell you, dividend should not impact the share price. Means what should happen? R should be equal to K. What is R? What is R? So KE should also be how much? 10%. KE 10% means how much is the PE? How much is the PE? PE equal to 1 by KE. So 1 by 0.1. Therefore, how many times, sir? 10 times. Better. Okay? Done? Okay. Next. Understood what PE can be calculated, how KE will be calculated using PE?
Yes, sir.
Don't nod head. Did you really understand? ఇప్పుడు కూడా అర్థం చేసుకోకపోతే కరెక్టే గంగాపురం ఎగ్జామ్ సో be very clear about the formula. KE given, PE not there, how to do? 1 by KE. PE given, KE not there, what to do? 1 by PE. ROE not given, what to do? EPS by BVPS. Isn't it? Missing data, I told you, Walter model missing data. Here is missing data. Data will be missing, we need to calculate the remaining information. Shall we?
Yes, sir.
Now tell me, C bit. Read the C bit. Will your decision change If PE is 8 instead of 12.5, original case for what is the PE? Now he is saying PE is 8. Now you will tell. If P by E is 8, KE equal to 1 by 8, which will become how much? Now tell me. R is how much? 10%. K is how much? 12.5%. Now you tell. Which case this is? R is greater or lesser? Lesser. In this case, what to do? 0% retention, 100% payout. Your decision will change or will not change? Will change. That's what he is asking. Write down yes. Example, you should write the analysis. Did you understand?
Yes, sir.
Shall we move on to the next one? Next, take question number 3. Practical problem number 3. Read the question. From the following figures, calculate the market price of a share using Walter model and Gordon model. Gordon model, another name is dividend growth model. Okay. See here. This is the data given. First thing, Walter model, what is the formula? D plus R by KE into E minus D whole divided by KE. With the data given, can you calculate it? First tell me, what is D? 6. What is R? What is R? See, they didn't tell you. What is R? 25. What is a KE? 20. What is, listening everyone? With the data can we calculate? Do as per Walter. 1 minute time. Walter. No formula. Directly put the answer. This is not the time to do Vignan Pradarsana. Write down. P equal to 6 plus 0.25 by 0.2 into 10 minus 6 whole divided by 0.2. Tell the numerator value. 0.25 divided by 0.2. 0.25 divided by 0.2. Total numerator value you tell. 11. 11 divided by 0.2. That's it. This is the value of the share as per Walter. Next, Gordon. You tell me now, I should use the first formula in Gordon or second formula in Gordon? I told you very clearly, that's why. If full data is given, okay, retention, proportion, everything is given in the question, formula 1 or formula 2 are? Formula 1 we have to use. Right now. P naught equal to E1 into 1 minus B whole divided by KE minus BR. E1 10, 1 minus B means what? Retention proportion. How much is the retention proportion? 0.4. Don't write 40%. 0.4 divided by KE 0.2 minus 0.4 into 0.25. Numerator 6 divided by 0.2 minus 0.1. 6 divided by 0.1, 60 rupees. Okay, everyone, shall we go to the next one?
Yes, sir.
What we did now? First concept, Walter analysis we have done. Second concept, Walter Gordon calculations we have done. Listening?
Yes, sir.
Third one, net profit, preference, number of equity shares, return on investment, cost of capital. Price as per Gordon model. When the dividend payout ratio is 25, 50, 100. Will you do?
Yes, sir.
Do it. 3 times you will do Gordon model, more than enough for the expense. Start. Practice, practice, everyone, do it. do 1 minus that to get the B value. Have you done for the 25% payout?
Yes, sir.
How much is the answer? 117? 175. Okay. At 50% payout also do. Have you done? Tell me, what is the answer at 50%?
58.33.
58.33. What is the value at 100%? 45 point? 43.75. So 175, 58.33, 43.75. Everyone have done your answer? Yeah. So we have completed question number 2, question number 3 and question number 4. Okay, next. Okay. Now come to question number 9. Mark it important for May 25. 4 marks question can come in exam. I will give 2 minutes time for you to read, but read the question once. Following information is given pertaining to DG Limited. Number of shares outstanding 1 lakh, earnings per share 25, P by E ratio 20, book value per share 400. If company decides to repurchase 5,000 shares at prevailing market price, what is the resulting book value per share after repurchasing? Read properly. Read the question properly. minute over. Don't see the answers. Try. Whether it is wrong also no problem, but try for the answer. Okay, tell the answer. Did you get the answer, everyone? Time up. Beyond that, you should not take time. See here. See here once. Good that you tried, but listen to the answer. Simple answer. First listen carefully. How many shares are outstanding? 1 lakh. Company wanted to repurchase how many shares? How many? 5,000 shares. Okay. If the company repurchase 5,000 shares, out of 1 lakh shares, only 95,000 shares will be available. After repurchase, how many shares, sir? Because 1 lakh shares for 5,000 already we bought back. So how much only will be available? 95,000 available. One clarity point. Correct? Next. Calculator you can do and tell how much is the book value per share. See and tell here, what is the book value per share? 400. How many shares? 95,000 shares. Originally 1 lakh shares. I am asking before and after. Two things we need to do. Okay? Tell me, what is the book value of the entire company before? Book value of the company, not share. Book value of the company. Total 400 into 1 lakh. So how many crores? 4 crore. 400 lakhs can also be written as 4 crore. Use common sense and tell. We are buying back how many shares? Buying back how many shares? 5,000 shares we are buying back. And 5,000 shares will be bought back at 400 each. At how much each? 400 each. Tell me. How many lakhs? 20 lakhs. How many lakhs? 20 lakhs. So what will happen automatically? My total book value is how much? 400 lakhs. Total book value? 400 lakhs. In this total book value of 400 lakhs, I will give back how much? 20 lakhs. So technically my book value will be 380 lakhs. Also can be written as 3.8 crores. Up here, understood the point clearly? Next, number of shares. Previously how many shares used to be there? 1 lakh. Now how many are there? 0.95. So what is the book value per share? Here 400. How much? That's it. This is the point. Everyone understood the point clearly? Answer. This is the original answer. Institute has committed one mistake. What mistake it has done? How many shares are bought back? Answer 25,000 they have given. Come to the answers. See, how many shares are bought back as per them? 25,000. How much? 25,000. Which is illogical. There they have given how many shares? 5,000. Here how many? 25,000 they have given. Clear everyone? And the next important thing. See here. Let me tell you what is the next thing. See here. How many shares are there in the company? 1 lakh. What is the earnings per share? How much? 25. P ratio? 20. P ratio will be 20. Okay. Listen carefully, I will tell you. P by E ratio equal to how much? 20. What is P? Market price. Not book wise. Market price. E means earnings per share. Now you will tell the answer. What is P? Market price. E, earnings per share equal to 20. Whenever buyback is made, buyback will not be made at book value. Buyback will be made at the market price. Therefore, instead of taking 400 for payment rate, we will take market price equal to EPS into 20. What is the EPS given in the question? 25. 25 into 20 will become how much? 500. So 500 into 5000 shares. Understood the point clearly? 500 into how many shares, sir? 5000 shares. Tell me how much? Loudly. Now you tell the final answer before, after. Did you understand the mistake committed by the institute? Instead of taking 5000, they have taken how many shares, sir? 25,000 shares. Question, sir? 5,000. Answer? 25,000. We will do the right answer now. Okay? See the screen. Point number 1. Tell me. What is the book value per share? Everyone? Here we don't know. We have to calculate. Next, tell me. What is the book value of the company? Lakhs, if you want to tell. 400 lakhs. 400 lakhs. Now please answer to my question. I have bought back how many shares? At what price? 500. I told now how to calculate 500. Tell me total how much? So 25 lakhs will be going out of reserves and surplus. Just now I told you before, book value is called as what? With what? Equity, share capital plus reserves and surplus. Plus how much we bought back? Means 25 lakhs reserves and surplus of cash will be going out or not. So my book value will be 400 lakhs. 400 minus 25 lakhs. 400 minus 25 lakhs. So tell me how much it will be? 375 lakhs. Isn't it? Number of shares. How many? 1 lakh. Here 0.95 lakhs. Here book value per share is 400. Not 394.74. This is the actual answer. What ICA has done? Mistake. Mistake is instead of taking 95, they have taken 75. What do you mean 75? 25,000 they have taken as a buyback. Okay. So 375 divided by 0.25. 375 lakh book value 0.95. How much you got? Did you understand this 375 calculation clearly? Everyone? See here now. What they have done? Instead of taking 5,000 shares, they have taken how many shares, sir? See here. Current market price. I think you understood this 500. Correct? Next, book value. Total 4 crore. Understood? Next one. Instead of taking 5,000 shares, they have taken how many shares, sir? 25,000 into 500. How much? That's why 1.25 crores they have taken. Did you understand at least now why their answers are changing? Question, either they should change the answer or they should either change the question. And this answer is correct only if the number of shares buyback is not 5,000. Number of shares buyback should be 25,000 in the question. Then this is the right answer. If you take 5,000 there, this is not the right answer. 394 point something you got, that will become the right answer. Clear everyone?
Yes, sir.
That's it. Please copy down. Let us do it together. Both the answers let us do. Important, that's why. Take question number 9. Step by step, better than them, let us do. First one. Step 1. Calculation of MPS. How to calculate MPS? What ratio to be calculated? P by E. P ratio is how much? 20. EPS already given in the question, how much? So P equal to 500. Bracket lo you write down buyback price. Buyback price. Buyback price. Step 1 completed. Step 2. Step 2. Do one thing. In the question you change it to 25. That's better. Answer also will tally. In examination, if they give 15,000, you will do for 15,000. Concept, if you understand, numbers only will change. Correct? Change this to 25,000 and let's do. Now you will tell and I will do. Tell me. We will buy back at book value, we will buy back at market value. Market value. Okay, na? Write down. Outflow on buyback. Outflow on buyback. Number of shares bought back into market price per share. Tell me, how many shares are bought back? 25,000 into market price per share 500. 1.25 crore. Step 3. Step 3. So outflow on buyback, number of shares bought back into MPS. 25,000 into 500. How much? 1.25 crore. Next, write down. Book value after buyback. Book value after buyback. Number of shares after buyback. Number of shares after buyback. Number of shares after buyback. Okay, well, number of shares after buyback. Tell me, number of shares after buyback into what? You should not take market price. If you take market price, you will get market value again. Listening, what we need to get? Book value per share. Book value per share. Now I want answer from you. How many number of shares are there after buyback? 25,000 or 75,000 or 1 lakh, 25,000 or 1 lakh? 75,000. Okay? Into. This is important. Please listen carefully. Listen first. What is the book value of the company before? Everyone? 400 lakhs. How many lakhs? 400 lakhs. Book value. Reserves and surplus and equity. In this are 4 crores. Correct? In this, how much we are paying out? 1.25. So how much is available? 2.75. Correct? 2.75. Now tell me, 2.75 divided by how many shares we have? 95,000 shares are, 1 lakh shares are, or 75,000 shares are? 0.75. Tell the value. 3.67. 3.67. Book value per share. Sir, this is what we are writing. Sir, look, 1 second. This is in lakhs or crores, sir? Answer. This is in lakhs or crores, sir? This is in what? Lakhs. Actually, this is in thousands, technically, to understand. Simply to tell, you can take this way. 2 crore 75 lakh divided by 75,000. Do that, then you will get a right answer. How much it is? 367. Multiply. 2 crore 75 lakhs. So book value per share is how much after buyback? 367. Did you understand how 367 is obtained? It's not 0.75 in the denominator, it should be 0.0075. Instead of writing like that, you can write like this. Confusion will not be there. Understood the importance of this question, everyone? Important for exams. 90% this question can directly come in examination with change in numbers. So be careful. If you are done with this, we will go to the next one. Everyone understood the question clearly? Next. Take another question. 9th one is over. Next. Listen, I will explain you another concept. Walter model completed, Gordon model completed, combination we completed, workings we completed, buyback also we completed. Next important thing is, write down, two-stage dividend model. Two-stage dividend model. So what is this two-stage dividend model? Listen. They will, listening, question will be given this way. Listen. They will give you data of a particular person. Data of a particular person they will give. They will tell like this. There is a person who is holding the share for 5 years. Thereafter expect a 5% growth rate. Like that some data will be given. In a correct way how to understand this question, let me explain. Whenever a person enters into share market for making investment, on the day of making investment itself, he will have an ideology of when to come out of the market. Means, you should know not only just when to enter, you should also know when to exit. Clear? Markets, two things are important. How much important it is to know the timing of entry, that much important is to know about the timing of the exit. Listening? Therefore, what they said is, whenever we go on a two-stage dividend model, they will give you the entry time, they will give you the exit of the shareholder also. Listening? Yes. Listen carefully. Very complicated concept. Once you understand, just like that you will do the questions answers. Listen. For example, I will enter into the market today to stay for 4 years. After 4 years, what I will do? Sell the share and come out of the market. Listening everyone? Tell me. I wanted to purchase the share when? Today. Answer. Today. Stay in the company for? 4 years. After 4 years, what I will do? Sell the share and come out. I will sell the share when? Today na? After 1 year, after 2, after 3, after 4. After 4 years I will sell the share. After 4 years means I wanted to know P1, P2, P3, P4. What? Yes sir, I am asking question. I am purchasing the share when? I am purchasing the share when? Today. Means P0 na, P1 na, P2 na, P3 na, P4 na? P0. Today I am buying. I wanted to hold it for? First year, second year, third year, fourth year. Fourth year end what I will do? Sell. Sell the share today na, after 4 years. After 4 years, what will be the price? P1 na, P2 na, P3 na, P4 na? Loudly? Very good. Now you answer. What is the formula for P0? Gordon formula, second formula. D1 by everything, doubt for you. D1 by K minus G. 0 here means 1 here. Clear? 0 here means 1 here. Why? Value of any asset is present value of future cash flows discounted at K. There is a lot of science in this formula. In ultra quick revision sessions, I will not explain the logic, sir. Just understand the point. Here 0 means here 1. Here 1 means here 2. Here 2 means here 3. Here 4 means here. That's what I am also saying. We are selling today na, after 4 years. What price you need? P1 price, P2 price, P3 price, P4 price. P4 equal to D5 by K minus G. D5 can be written as D4 into 1 plus G divided by K minus G. That's it. If you understand this, we can start doing the problem. Shall we do it? Let's start. First, one illustration question is there on that. Let us do that. Take illustration. One second. Illustration slate is not there. Come to question number 5. Practical question number 5. In this chapter, along with practical questions, we will also do 2 illustration questions. Okay? 11 questions we will do. Take question number 5, practical question. Read. Question number 5, practical question. Read the question. A&R Limited is a large cap multinational company listed in BSE in India with a face value of 100. Company is expected to grow at 15% per annum for the next 4 years. Means I am holding for 4 years. At that time, I am expecting a growth of how much percent? 15%. I will sell today after 4 years. Loudly. I want P1, P2, P3, P4. P4 equal to D5 by K minus G. D5 can be written as D4 into 1 plus G. At that time, take this 5% he is telling as a G. Listening? Next. The shareholders expect how much return? 20%. What is this 20%? KE. Next. Company paid. Past tense means D0 na D1 na? D0. How much? 120 as a dividend per share for the current financial year. Shares of the company are traded at an average price of 3122 on last day. Find out intrinsic value per share and state whether the share price of 3122 is overpriced or underpriced. Super question here. Read the question first. Read the question. Okay, have you read? Tell me. This particular company shares I am holding. I am expecting how much dividend growth in the next years? How much years is my time horizon? How many years I am going to hold it? Question coming means intention implied that I am holding only for 4 years. After 4 years, what I will do? Sell. 4 years now, how much is the dividend expected? How much dividend they paid now? I am expecting how much dividend next year? 120 plus 15%. Next, that one plus 15%. Like that we are expecting. Listening? Let's do. Keep the heading. Practical problem number 5. Practical problem number 5. Here, cash flow, PV at the rate of 20%, PVCF. Year 1, 2, 3, 4 and 4. Why 4 and 4 two times? Fourth year I will receive dividend and then sell the share. Fourth year I will hold it for how many years? 4 years. First year what I will receive? Dividend. Second year dividend. Third year dividend. Fourth year dividend and then sell the share. Listening now? So first 4 years what is the growth rate? 15. For this period what is the growth rate? 5. Okay? 120 plus 15%. Fast. 138 plus 15%. Point? Plus 15. Plus 15. 209.88. Take it like that only. 209.88. Up to here have you done? Most important adjustment comes now. Let us do together. Tell me. I am selling my share on P1 or P2 or P3 or P4 or P4 equal to D5 divided by K minus G. D5 can be written as D4 into 1 plus G divided by K minus G. What is the D4? 209.88. G is how much? 1.05. Because when you are selling, you are expecting the perpetual infinite growth rate as how much percent? 5. During your holding, 15% growth. When you sell, 5% growth. Listening? Divided by K, 20% minus 5%. Numerator value. Total value, Total value, Just a minute. Have you done with the answer? Tell me, how much is this answer? This one? 1469.16. Huh? So 1469.16. P factor 20% for first year. Point? Next year? Next? 57? 578 after what is there? 578. Next? 0.48. 48. Next. Next also 0.482 only. Both belongs to same year. Okay. Multiply. Tell the final answer. Okay. Tell the final answer. 114.43. See here. What is the real value of the share? What is the real value of the share? 1140. It is trading in the market at what price? 3122. Overpriced or underpriced? Extremely overpriced. 1100 share is trading in the market at how much? 3122. And the bubble will be busted someday. Don't purchase those shares. Understand the point or not? So finally AFM 90% of the syllabus is depending on that. Pricing, understanding the market, how much it is, whether to buy, whether not to buy. That's it over. Listening? Yes, so now see the answer. See. We got how much? 1140.4. Do you know why these people have got a different answer? Okay? First, listen, I will tell you. Listen, first year how much you got the answer here? 138 into 0.833. 114. Almost 115, correct? Sir, when all the answers are right, why the answer has changed here? Doubt will come or not? 4 years they have taken 5 years here. So all wrong answers here. Questions are good, answers are nonsense. 1, 2, 3, 4. Correct? This is 4th year. They have taken this as how many years? That's why answer is wrong. This answer is wrong. Did you understand or not? How many? Clearly he said here. Question clearly they mentioned. See here. What they mentioned in the question? How many years, sir? 4 years. Clearly they said here. Listening? So how many years only you should do? 4 years. By mistake they have taken 5. Listening? That's why answer has went wrong. This is the right answer. Okay? What is the final answer? 1140.43. Done. We have done which question now? Question number 5. Next. Now come to question number 8. Mr. H is currently holding. That's why I am telling you, dividends chapter study material mistakes are there. Okay? Other chapters almost negligible, 1 or 2 mistakes are there, but dividends chapter 2 questions the mistakes are there. You saw blatantly the mistakes what they are doing. Easily we can identify. 5,000 shares they have taken 25,000. Mistake number 1. 4 years they have taken 5 years. Mistake number 2 like that. Clear mistakes, visible mistakes are there. Okay. You don't do mistakes in exam. You have to do right only. Okay. What is right you have to do. Mr. H is currently holding 1 lakh shares of HM Limited. And currently the share of HM Limited is trading at 50 per share. First tell me, what is 50? Market price. Mr. A have a policy to reinvest amount of any dividend received into share back again of HM Limited. If HM Limited has declared a dividend of 10 per share, please determine the number of shares that A would hold after he reinvests dividend in the shares of HM Limited. Good question. Read the question first. Take the question properly. Don't see the answers, do the question only. Try. Okay? Answer? 1,20,000. Okay. See here. You should first understand on what area this question is tested. This question is tested on ex-dividend, cum dividend concept. Listen, let me explain what it is. Whenever company declares dividend, market prices will fall. Whenever company declares dividend, market prices will fall. When dividend is announced but not paid, prices will be loaded with dividend. Once a dividend is declared, prices will again fall. Reason is very simple. I am purchasing a share, means I am purchasing what? Asset. I am purchasing what? Asset. Investment for me. Listening, company's share is trading in the market. Kaushik Mukesh purchased, means it will be shown in the balance sheet. Assets or liabilities are for me. Asset as an investment. Correct or not? When I am purchasing a share today, 2 days before, board of directors proposed dividend, not a declared. The board of directors proposed dividend. 5 rupee dividend they proposed on that. Listening. Market price is how much? 500. Example. Market price is how much? 500. Listening. When it is 500, after proposal or before proposal? After proposal, but before dividend. After proposal, but before payment or declaration. Start again. Who proposes dividend? Who proposes dividend? They propose dividend. How much? 5 rupee. 495 share price loaded with dividend became 500. Dividend 5 rupee paid, 500 share price again comes to 495. Because after proposal of dividend, if you purchase a share, you are not purchasing a share, you are purchasing a share as well as the dividend. Listening or not? Therefore, the moment board proposes dividend but not paid, price of the share will be loaded with dividend, which is called as what price? Cum dividend price. It is called as what price? Loudly. Dividend declared. Ex-dividend price. See the question now. What is the MPS? What is the market price per share? Per share. How much dividend is paid? Immediately once the dividend is paid, 50 share price will again come back to how much? 40. Now tell me, take calculator. How many shares are there in this HM Limited? Loudly. How much dividend is declared per share? 10 rupee per share. Okay? Now tell me, 1 lakh into 10 rupee. How much? 10 lakh. Now tell me, you are Mr. H. You received how much dividend? Start again. You are receiving how much dividend? 10 lakh cash. You will put it in the pocket or reinvest? You will reinvest after dividend declaration or before dividend declaration? After dividend declaration, price is 40 or 50 or? Divided by 40. Answer over. Other question. Now did you understand the point clearly or not? Hello, everyone understood? Tell me, how many shares you are holding? How many shares you are holding? 1 lakh shares. On that, how much dividend company declared? 10 rupees. 1 lakh into 10? 10 lakhs. That 10 lakh rupee cash, you will put it in pocket or you will reinvest back? Reinvest back in the same company shares. At what price? Market price. After declaring dividend, market price will be cum dividend price, ex-dividend price. Ex-dividend price. What is ex-dividend price in this? 50 minus 10, 40. So that 10 lakh rupees will be reinvested back at 40 rupees each. 25,000 shares you are reinvesting back. Already how many shares you have? Answer. You reinvested how many? Totally how much will be there? That's the answer for this question number 8. Everyone understood? See here. 1,25,000. Perfect. 1,25,000. Everyone understood the concept? I am not doing this. Understood? Okay. Now, take question number 6. Tell me, how many practical questions are there totally? 8. How many we completed? Totally 9. Sorry, totally 9 are there. How many we completed? 6 or 7? 6? First one we did not do, correct? So, question 1 and question 7 are on Modigliani-Miller. Last we will do Modigliani-Miller and close the chapter. Okay, na? Because that's the most important one in this chapter. Take question number 6. Very important question. Very difficult also. So listen carefully. While reading the question itself, be cautious. Can come in exam directly. In the month of May, the current financial year, shares of RT Limited was sold for 1460 per share. A long-term earnings growth of 7.5% is anticipated. RT Limited is expected to pay a dividend of rupees 20 per share. Calculate the rate of return an investor can expect to earn, assuming that dividends are expected to grow along with earnings at 7.5% per year in perpetuity. It is expected that RT Limited will earn about 10% on the retained earnings and shall retain 60% of the earnings. In this case, state whether there would be any change in the growth rate and cost of equity. Very good question. Read the question first. Read the question carefully. Have you read the question? Okay, see here. What is the current market price of the share? What is the current market price of the share? 1460. What is the growth expected? What is the D1? Why it is D1? Why it is not D0? Expected to pay. How much? 20. Calculate the rate of return. Means he is asking us to calculate KE. Shall we do it together? Which model we need to use? You don't know. Walter model or Gardner model? Which model you have to use? Gardner model. What is the formula? You forgot. P naught equal to D1 by K minus G. Write down. Practical problem number 6. Step 1. Calculation of KE. Calculation of KE. K equal to D1 by K minus G. Sorry. Very sorry. K equal to D1 by P naught plus G. You have done or not yesterday?
Yes, sir.
Okay. You tell me, I will write. What is the D1 already given? 20. P naught plus growth 0.075. Tell the value. 8.87. 8.87%. Okay. In the study materials or otherwise, if they write 20 as a current dividend D0, that's a mistake only, ignore that. Expected whenever comes, it represent D1 only. Understood? So tell me, what is the first answer? 8.87%. Please see here. Please see here once. See, they have again applied growth. That's why I told you. Lot of mistakes are there in this chapter. I don't know why. So many mistakes. Clearly they said what is the 20? Expected dividend or dividend paid? Expected dividend. Expected dividend means what? D0 or D1? D1. Already they have given D1. Again you need not apply the growth on that. Clear? But they have again applied growth. That's why I am telling you. Clear? Lot of mistakes are there in this dividend chapter. Next. Come back. This point we completed. How much is the answer? 8.87. Write down. Step 2. Step 2. See the question first. Step 2 question. It is, read, it is expected that RT Limited will earn 10% on retained earnings and shall retain 60% of its earnings. In this case, state whether there would be any change in the growth rate and cost of equity. I will ask you a question, tell me. G equal to what into what? You forgot it. What is the formula of a G? G equal to what into what? B into R. What is B? Retention proportion or return on equity or return on investment. Correct or not? That's what he is saying. In this particular question, we are paying a dividend of how much? 20. How much? Yeah, 20. 20 is how much retention, how much EPS, we don't know. Nothing is given in the question. Correct or not? Listen carefully. Here clearly he said 60% of what will be retained? Earnings will be retained. Means how much will be paid out? 40% will be paid out. How much will be paid out? Okay. Tell me, what is G? B into R. Tell me, what is the retention? 0.6. What is the return on equity? 0.1. 0.6 into 0.1 will be 0.06 or also called as what? 6%. That's the growth. Previously growth is 7.5. Now the growth is 6%. That's what he is asking. State whether there would be any change in the growth rate? Yes, there will be a change in the growth rate. Shall we do it or not? Write down. Calculation of new growth rate. G equal to B into R. What is the retention now? 0.6. How much percent? 6%. Understood up to here? Next. One thing we completed. G value completed. But listen carefully from now. Listen. He is also asking us to calculate the new KE for the question. What KE? New KE for the question. He is also asking that. Listen. Step 3. Calculation of new KE. Calculation of new KE. See the question. What is the current market price of the share? 1,460. What is the growth rate we are expecting? 7.5. We are expecting that it will pay how much? 20 per share. On that basis, when we calculate, we got KE as how much percent? 8.87%. 8.87%. Listen carefully. This 20 is dividend already paid or expected to pay now? Loudly. But we can understand one thing. Some X amount is there, on that 7.5% growth is applied, then we got the 20. Correct or not everyone? How much? Some X amount, we don't know how much it is. Clear? On that how much growth is applied? 7.5% growth is applied. And after application of 7.5 growth, we got how much? 20. Did you understand my point or not? Listen carefully what I wanted to tell. Growth rate is changed from 7.5% to 7.5% to first very important thing. We should know the EPS of the company. What related to the company? EPS we need to know. What we know here? DPS only we know. What only we know? DPS only we know. We don't know EPS. I will ask a question, tell me. G equal to what into what? Huh? R is a constant always, it won't change. So tell me, how much is the R? 0.1. Previously, what is the G? 0.075. Means previous retention proportion we can know or not? Tell me how much? How much percent? That's it. Means previously our payout is how much? 75. Previously our payout is how much? Now understand the logic. 75% is the retention. 25% is the payout. So 25% is the payout. How much is paid as a dividend? 20 rupees. This 20 rupees is equal to how much percent? 25%. Can we know the 100% value or not? Tell. That's it. This is the EPS. This is the EPS. Tell me, what is the EPS expected? 80. What is the EPS expected? 80. What is our payout ratio? Changed payout ratio? 60. Retention or paid? 60% is retention or paid? Retained. Means how much is our payout ratio? 40. So tell me how much it is? 32. How much it is? 32. So T1 will become 32 divided by 1460 P naught plus G is 0.06. Tell the value. 8.19. Did you understand what we have done here? I will redo again. Listen carefully. Start. Tell me now. What is the existing growth? 0.075. What is G? B into R. What is our G? 0.75 into B into R is how much? Always R will be taken as a constant. Okay. So now tell me, what is the existing B? How much percent? 75%. What is the existing payout? 25. So what is the expected dividend in the existing case? 20. This rupees 20 is equal to how much percent? 25%. How much percent? 25%. So 100% will be equal to how much? 80. Rupees 80. Expected EPS is rupees 80. Expected DPS, also called as D1, equal to rupees 80 into what is our new payout ratio? 40%. So how much rupees? 32. KE equal to D1 by P naught plus G. What is the D1 now? 32 divided by what is the P naught? 1460 plus 0.06. Tell the value how much? 8.19. See here once. What is the question we completed now? Question number 6. See here. Perfect. This is the answer. Understood? Funniest part is, here they have taken the growth, here they have done as per what we have done. That's why I said their answer is wrong. They listening or not? Here they have taken this, but here we and they, both of them get the same answer means, second bit they have done as what we have done. First bit they have done in a different way. That's why I told you this particular chapter, a lot of mistakes are there in the study material. Did you understand the way the mistake is there? What is the mistake in the first bit? What is the mistake in the first bit? Growth should not be taken, because already what is given? Expected is given, again growth should not be added. Clear? Second bit they have done properly again. Okay, so what is the final answer? K equal to 8.19. Mark it, extremely important. Copy down this. First of all, copying all these things, okay. Understood or not, everyone?
Yes, sir.
Do it. Everyone understood the way of doing the answer?
Yes, sir.
Clarity?
Yes, sir.
Next. Copy. Copy down first. We will go into the last area, Modigliani-Miller. Completed writing? Can you go to the next one?
Yes, sir.
Next. So we completed all important questions that were there in the study material relating to the chapter dividends. Now keep the heading Modigliani-Miller model. Obviously, highest number of times, if there is any topic that came in the exam regarding dividends chapter, obviously it is MM model. Modigliani-Miller model. Okay? Listen. There are three important formulae of Modigliani-Miller. If you understand these three, that's it. Nothing can come in examination beyond this. Mark my words. But you should understand all the three formula properly. 5 minutes time for understanding, 10 minutes for one question, another 10 minutes for another question, chapter over. Shall we?
Yes, sir.
Let's begin. A. First formula. P naught equal to D1 plus P1 divided by 1 plus KE. Next one. MP1 equal to I minus E minus ND1. E minus ND1. C. Wealth of the company. Wealth of the company. P1 into N plus M minus I plus E whole divided by 1 plus K. Write down the 3 formula. I will tell you when to use which formula and how to use. That's it. From exam's point of view, that is more than enough. What you need in exam question comes, you should do right thing. They get the idea. If question comes in exam, you should get out 6 on 6. That we will understand using it. Logic, sir, why it came, all those regular classes, how can I make you to understand? 3.5 hours it will take to explain that, how the formula came. One thing I can guarantee, question comes in exam, we will do. Written? Simple logic. I will tell you idea behind the formula. Number 1, P0, price today. Price D1 plus P1 divided by 1 plus KE. D1 plus P1 divided by 1 plus KE. Logic is extremely simple. I am purchasing a share today. See there, see the screen. I am purchasing a share today. I am receiving dividend after 1 year, selling the share after 1 year. Today the discounted value is P0 and the answer over. Value of any asset is present value of future cash flows discounted required rate and over. Understood? This formula is also called as single period holding. Means what? Today I will purchase, 1 year after I will sell. Then this formula will be useful. Listening? What is the meaning? Today we will purchase. Today we will purchase at what price? Today's price. What do you mean by today's price? P0. After purchasing today, after 1 year, what you will receive? Dividend. After receiving dividend, what you will do? Sell. Sell at what price? P1. You will receive D1 P1 today or after 1 year? I want today's value. What to do? Discount by 1 year. That's the formula. Understood? Very good. Next. What is this? Read. MP1 equal to I minus E minus ND1. This is important formula out of all the 3. Okay? Why? Listen. M. Number of shares. Everyone repeat. Number of shares. Okay? Number of shares. M represents number of shares. P1 represents price after 1 year. Price after? 1 year. Loudly. Price after? 1 year. Very good. What is this? Let me explain. Modigliani-Miller model of what they say is, whenever investment opportunity is there, don't go for public offer. Don't go for retained earnings. Go in a combination. For example, I want 1,000 rupees to invest. Already in my pocket 500 is there. Listening? Yes. How much is the asset cost? 1,000. But how much is there with me? Balance of 500k, go for public offer. Don't raise entire 1,000. Listening? Don't raise entire 1,000. How much only is there? Now tell me, in my pocket how much is there? 1,000 is there. How much is the investment? 1,000. Let us say, how much is investment? 1,000. How much is there in my pocket? 1,000. Answer. 1,000. How much is there in my pocket? Second example. How much is there in my pocket? 1,000. First example, 500,000. Second example, 1,000. Tell me, how much is there with me? 1,000. How much is investment? 1,000. In this 1,000, I wanted to pay 400 as a dividend. Tell me, I paid 400. How much is there with me? 600. But investment is how much? 1,000. Answer. 1,000. Raise public offer at only 400. Don't go for entire 1,000. Understood? Yes, what? Adhe formula. I investment. Total investment, don't raise public offer. M means number of shares issued in public offer. M means You will go for public offer after declaring dividend. Means D1 na P1 na? P1. You will raise the public offer after 1 year. Tell me, after 1 year what is the price? What is the price? P1. How many number of shares you are raising? M number of shares. M into P1 will be called as what? Amount raised on public offer. Amount to be raised on? Tell me. In my example, how much is my investment? Loudly. Very good. Minus. What is my total earning? 1000. In that, for the existing N number of shareholders, I have paid dividend of D1. Correct or not? How much dividend I am paying? Loudly. Tell me. 1000 minus 400. 1000 minus 600. 400 only raised through public offer. Understood the point or not? Tell me. What is I? Investment opportunity. What is E? Earnings. What is N? Existing shares. D1. Dividend to be paid. We are going for public offer after declaring dividend or before declaring dividend? We are going for public offer after declaring or before declaring? After declaring. Correct? Until the new shareholders who are coming in, will they get the dividend or will not get? That's why N into D1, not N plus M into D1. Not N plus M. It is only N. Because M is what? New shareholders coming in after declaration of dividend. Listening or not everyone? So tell me now, what is MP1? 4 times I repeated. Tell me, what is MP1? Amount received on public offer. Okay? I. E. N. Start again. Bad response. M. Number of shares to be issued on public offer. P1. Price after 1 year. What is MP1? Amount raised on public offer. I. Investment. E. Earnings. N. Existing number of shares. D1. Dividend to be declared. ND1. ND1. Total dividend paid to the existing shareholders. E minus ND1. E minus ND1. All are common sense questions here. Tell me, E minus ND1. Earnings available after paying the dividend. After paying the dividend. How much is there in my pocket? 1000. Start again. How much is there in my pocket? 1000 is E. How much I paid as a dividend? 400 is ND1. So how much is there with me? Investment. So public offer should be only 400 is. Understood the point everyone? Next. P1. Price when? N. M. New shares. I. Investment. E. Earning. Discount by 1 year, you will get the current wealth. And the easy question. On this we need to put the numbers and solve the answers. Beyond this, in the time available, I can't do circus. Shall we do the questions and complete the chapter? Yeah. So, take question number 1. Practical question number 1. It is 5 marks question. Next one is a 8 marks question. 2 questions I will solve for you in a minute. Later you practice at home any remaining questions. But one thing I can guarantee, 1000% I will give guarantee. Do these 2 questions, any question you do is similar to this. Numbers will change, concept is same. Listening? Start. Read the question. M Limited belongs to a risk class for which capitalization rate is 10. What is my capitalization rate? KE. I told now capitalization rate means KE. Continue. It has 25,000 outstanding shares. Current market price 100. Next. It expects a net profit of 2,50,000 for the year and board considered dividend of 5 per share. M Limited requires to raise 5 lakh for an approved investment expenditure. Illustrate how MM approach affects the value of M Limited if the dividends are paid and if the dividends are not paid. This is the question. Read the question first. Shall we do? Write down. Practical problem number 1. Keep the heading in the notes. Shall we do it? Write down. Practical problem number 1. M Limited belongs to the risk class. Capitalization rate is how much? 10. First thing, he is asking us to know how when dividends are paid and dividends are not paid. Write down. Step 1. Calculation of P1. Dividend not declared. Dividend declared. Tell the formula for P0. D1 plus P1 divided by 1 plus K. Do in the first case, when dividend is not declared, D1 will be how much? Already current market price is given. How much is the current market price? 100. That P1 or P0 na? P0, 100 equal to D1, 0 plus P1 divided by 1.10. P1 equal to rupees 110. Understood the calculation? Next, dividend is declared. Dividend is what? Declared. Tell me. If the dividend is declared, price 100 equal to D how much? 5 plus P1 divided by 1 plus K. 1 plus 1 0. So P1 equal to 110 minus 5 how much? 105. This is a classic example of come dividend, ex dividend. Dividend is not paid 110. Dividend paid 5 rupee dividend gone. Understood or not? 110 is what? Come dividend price. 105 is what? Ex dividend price. Understood? Next. So P1 calculation completed. Next, step 2. Calculation of MP1. What is MP1? Amount to be raised on public offer. Okay, write down. If dividend is declared. If dividend is declared. If dividend is declared. So calculation of MP1 if dividend is declared. Tell the formula. MP1 equal to I minus E minus ND1. You see the question and write down the answer. What is the investment opportunity available? 5 lakh. If dividend is, do one thing. Dividend is not declared. First write down not declared. First do for not declared, next we will do for declared. Tell me, if dividend is not declared, please everyone follow. If dividend is not declared, tell me, minus, what is the earnings of the company? What is the earnings available? 2,50,000 minus D1 is 1 rupee, 2 rupees or 5 rupees, 0. So 0. So I need to raise how much using the public offer? 2,50,000 only we should raise. Correct? Next. Already P1 we know. How much is a P1? 110. M equal to 2,50,000 divided by 110. Decimals also you tell. 22.73 73 shares. 2272.73 shares. 2272.73 shares. This is the answer to dividend is declared or not declared? Write down for declared. If dividend is declared, write down the formula one more time. Practice will be there. MP1 equal to I minus E minus ND1. Tell me how much is the investment? Sorry, 5 lakh minus how much is the earning? But entire 2 lakh 50 is available and paid dividend. Paid dividend. How many shares are there at the beginning? 25,000. Each share how much I paid? 5 rupee value. So tell me, 5 lakh minus 1 lakh 25, 3 lakh 75,000. So MP1 equal to 3 lakh 75,000. M into P1 how much? 105. Be careful. P1 you should write for dividend declaration case. 105. So M equal to how much? 3,000? 4? 4,3, yeah? Okay, 4,3. Okay. Okay, everyone? Next, step 3. Value of company. Value of company. Write down. If dividend not declared, if dividend is declared. If dividend is not declared, if dividend is declared. Tell me now. Number of shares. Tell me. Already company is having 25,000 shares. Add 2272.73 to that. Totally tell me. Already 25,000 are there. Further we added another 2272.73. What is the total? 27,270.73. Like that. Second case also. 28,571.43. MPS. MPS. So this is the number of shares after public offer, before? After. So P1 price. Tell me how much is the P1? 110, 105. Value. 27,272.73 into 110. How much? 30 lakhs. 28,571.43 into 105. Same 30 lakhs only will come. Small difference. Value of the company will be same or will not be same? Will be same. That's what he wanted to tell. So what will happen to the value of the firm? It will be unchanged. The Modigliani-Miller model understood? Yes, tell me, this is the thing we have done for after public offer, before? After, before? Let us do also for before and check. Okay? Write down. Before value. You know the formula. You know the formula. NP not equal to P1 into N plus M minus I plus E whole divided by 1 plus K. Tell me, what is the P1? Dividend declared. Oh, sorry, dividend not declared. Dividend not declared. P1 110 into number of shares minus I plus E divided by 1 plus K. 1.1. $30 lakhs minus 5 lakh plus 2,50,000 divided by 1.1. How much? 25 lakhs, huh? 25 lakhs. Next, dividend is declared. So this is not declared case. Declared case also we are doing. Tell me, if you declare, what is the P1? 105 into 28,571.43 minus I. How much is I? 5 lakh. plus E 2,50,000. Do it. Already we have the value 30 lakh minus 5 lakh plus 2,50,000 divided by 1.1. Again same answer will come. How much? 25 lakh. So whether before or after, value of the company will remain unchanged. Clear? Sub 3 formula everyone understood clearly? Yeah?
Yes, sir.
This formula has a long derivation of 15 minutes. I am not going into that now. So exam if question comes, are you able to solve? Okay, over. Enough. Next, come to the last question in this chapter, question number 7. Akash Limited has 10 lakh equity shares outstanding at the accounting year, start of accounting year. Existing market price 150. Expected dividend D1 or D0 na? D1 8 rupee. KE 10. Calculate the market price if dividend is not declared and if the dividend is declared. Calculate the number of shares to be issued. Means what he is asking? M. At the end of accounting year, if the income is 3 crore, budget is 6 crore, dividend declared, not declared, separately you have to do. Will you do this? Start. I am giving you 2 minutes time for step 1, 2 minutes time for step 2. tell me the answer for the first one. What is the P1 value if the dividend is not declared?
Not declared
160?
165.
Declared?
157.
150? 165 and 157. Okay, next. M in case of dividend not declared.
1,81,818.
818. If dividend is declared?
2,40,038.
Okay, next. Value also have you calculated? See the question there, clearly they are asking, prove that market value of the shares at the end only remain unchanged. End means first model. NP not you need not do here. NP not, P not means what? Today's value. He is asking at the end. Means directly take the number of shares, P1 multiply it so the values are same. So when anyone have any doubt, you can ask. Completed. What is the value of the company? 90? 90 crore 50 lakh. Almost 90 crore. 90? 19.5. Okay. 19 crore 50 lakh. Okay. Which question we have completed? Question number 7. Perfect. 19 crore 50 lakhs. That's it. Dividends chapter is also completed. Okay. First of all, everyone tell me, are you all confident with the chapter?
Yes, sir.
So let us start with the next chapter, ratios analysis. This chapter name is also called as financial statements analysis. Study material, you will not see the name ratios analysis. You will see the name called as financial statements analysis. So in short, for our understanding, I call it as ratios analysis. Whatever you are seeing on the screen, liquidity ratio, capital structure ratio, activity ratio, sales profitability ratio, capital profitability ratio, and miscellaneous ratios. These are the most important ratios which we need to cover. Clear? Beyond which questions generally will not come. Even if any 1 or 2 questions we find beyond these formulae, those are all very easily understandable formulas. Clear? So let us begin with this. Before that, first write down the formula clearly. Listen, like Walter Garden, whatever we have written, everything of this chapter we will summarize in first 5-10 minutes. Later we will start doing the problems. Clear? First, listen. First you keep the heading liquidity ratios in your notes. Okay? Liquidity ratio. Listen, I will explain the ratio meaning first. After that you will write. Okay? First, there are two important liquidity ratios. Current ratio, liquid ratio. Logic, everything I have written here, that's not, I am not going to discuss. Perfectly from the exam's point of view, if a question comes, how to present the answer is our agenda. So, what is this? Current ratio. Formula is current assets by current liability. When I say current assets means any asset which is kept for a period less than 1 year. Current liabilities are those payables within 1 year. Payable within 1 year. So, those will come on the numerator assets. Current liabilities will be coming on the denominator. So, what is the formula for the current ratio? Current assets by current liabilities. Current asset by, it is expressed in a ratio 2:1, 1:1, like that they will express. Clear? Next, liquid ratio. In this current assets, you should understand one disadvantage. Cash, fixed asset, current asset. Cash, already it's a current asset. Next, and it is also a liquid asset. Also it is a liquid asset. Already it's a liquid cash. Correct or not? Okay, next. What is this? Debtor is a current asset. Whenever you want, you can give a discount policy to the debtor and realize immediately. This is also liquid asset. Bills receivable, you can mature it even before due date. These are also current assets as well as liquid asset. Next one is what? Stock. Stock ki problem will come. Do you know why? Stock should get converted into debtor. Debtor should get converted into cash. Cycle time is more in stock. That's why what people call liquid assets equal to current assets minus stock minus prepaid expenses. Listening, current assets minus stock minus prepaid expenses is called as what? Liquid assets. Everyone tell me, what is it? That's why liquid ratio means liquid assets by current liability. Liquid assets by current liability. Current liabilities is same. Liquid assets will change instead of current asset. Clear? What is a liquid asset? Current assets minus stock minus prepaid expenses. Okay, open the notes, write down. What is the first ratio? Liquidity ratios. Heading kept below, write down number 1, current ratio. I will tell the ratio, you will write the formula there. Equal to what? Write down current assets by current liabilities. Like that, practice in the class itself. Second one, liquid ratio. Liquid ratio or quick ratio. Another name is what ratio? Quick ratio. Equal to, what is the formula? No. Liquid assets divided by current liabilities. Below write down. Liquid assets are also called as quick assets. Liquid assets are also called as quick assets. Write down. LA equal to, LA means what? LA equal to CA minus stock minus prepaid expenses. Done. Next, keep the heading. Capital structure ratios. Capital structure ratios. Capital structure ratios. Okay. Listen. First I will explain. After that I will ask the formula. You write the answer. Okay. See the screen once. What is the first one? Debt equity ratio. Simple answer. Debt equity means for equity how much is the debt? Okay. Debt by equity. What is it? Tell me, what is the formula? What is the concept? Huh? Formula. Debt by equity. Very good. What is the next one? Proprietary. Propriety. Also called as proprietary. Owners ratio. What is this? Everyone, equity divided by. Do you know what is the mean? This meaning understood? Yes, total debt to the total equity. What is the ratio? Debt equity. Listening? Next, what is this? In the total assets on the balance sheet, how much is financed by owners? Balance sheet. Okay? Balance sheet. Assets 100 rupees. Okay, va? Equity share capital reserves and surplus 30 rupees. 30 by 100 means in the total assets 30 rupees is financed by owner, 70 is financed by lender. That's the meaning. Understood the point or not? That's the meaning of this propriety. Tell me, what is the formula for propriety ratio? Equity by total assets. 6 problems this particular question came. Okay? Almost 6 questions this particular adjustment came. So tell me, what is this? Propriety or proprietary ratio. Formula. Equity divided by total assets. What is this? Meaning is what? Equity share capital plus reserves and surplus. What is the another name? Book value. Morning I told you. What is another name for this? Book value. Next. What is this? What is this? Capital gearing ratio. Listen. Sir, what is capital gearing ratio? Question will arise. Correct? Capital gearing ratio means debt equity ratio in a different way. Listening? Tell me. What is this? Answer. Debt only will come. Capital gearing ratio, like debt plus preference share capital also will come. What also will come? Preference capital also will come. What is this? Answer. Equity. Equity represents what? Owner's fund. Okay, na? What will be there inside this? Resource and surplus. No. Equity share capital, preference share capital also will come here. So the difference you need to understand. Proprietary ratio la preference share capital is also a owner. When you do the proprietary ratio, preference shareholder is also a owner. When you are doing capital gearing ratio, preference shareholder will be treated as a lender. That difference you need to understand while doing the questions and answers. Listening? What I said? What I said? While doing the proprietary ratio, preference share capital is also treated as a proprietor. Is also treated as a proprietor. Next. While doing capital gearing ratio, preference shareholder also will be treated as a lender. Why, sir? Question will arise. Why? A consistency should be maintained. Is the consistency illa? What is the reason? That's the question. Why consistency is not? Here it's not about consistency. Here it is about concept. Do you know what is the problem? Capital gearing ratio means any capital which gives financial leverage is called as a gear. Lever is a gear. Yesterday we read one EBIT, EPS impact analysis we have done in the class. Preference share capital will give you some amount of leverage. Debt will give super leverage of interest. Correct or not? Financial leverage will be there only if there is either equity, either debt or preference. That one. Any capital which gives leverage is called as gearing capital. Listening? Tell me, what is this? Formula, equity. Equity share capital plus resource and surplus. Preference will not come because already it came here. Understood? Ante in simple terms, propriety ratio equity represents what? Equity share capital, preference share capital, resource and surplus. Capital gearing equity means only equity share capital and resource and surplus. Listening? Debt equity ratio equity also includes preference share capital. Only in which case equity preference will not come. Capital gearing ratio equity what will not come? Preference will not. In all other cases, whenever equity means what? Equity share capital, preference share capital, resource and surplus. Understood?
Yes, sir.
What is this? Answer. Debt service coverage ratio. Listen. Whenever debts are there, there are two payments. Debt I need to pay the principal installment amount, interest amount. Principal amount, interest amount. Both should be paid out of what? Sales are, contribution are, earnings before interest and tax are. That's why earnings before interest, depreciation, tax and amortization divided by interest plus installment. Listening? Yes, sir, you said EBIT. Here DIT is there. Depreciation is a non-cash item here. Correct or not? Yes, depreciation is a cash item or non-cash? No, you should not consider that. No? Answer? Yes, sales 100, variable cost 50. What is the contribution? 50 minus fixed cost, depreciation 20. What is the EBIT? 30. But really we don't have 30. We really have 50. Yes. Correct or not? Yes, from this you will pay the interest. Yes, correct or not? That's why they will take this more realistic way of understanding. Clear? Tell me, what is the formula for debt service coverage ratio? EBI DTA divided by interest plus installment. When I say installment, principal part of installment, because already interest is separated here. Installment two components will be there. Principal, interest. Already interest separated. Means what installment? Principal installment what you have to pay. Listening? That's it. Tell me, what ratios we completed? Once ratios are completed, formula, problems will be completed just like that. First you need to understand the ratios properly. Once you understand, problems will be completed. But first you need to have the clarity on basics. Okay. So tell me, what are the four formulas we completed? Debt equity ratio, propriety ratio, capital gearing ratio, debt service coverage ratio. Debt equity ratio formula. Debt by equity. Equity what will be there? Equity share capital, preference share capital, resource and surplus. Debt means long-term debt. Debt means? Why not short-term debt? Short-term debt is taken in current liabilities. Already we have taken current ratio. Listening? Done. Next. Propriety ratio formula. Equity divided by total assets. Equity means equity share capital, resource and surplus, preference share capital. Or equity preferences, resource and surplus. Divided by total assets. Next. Capital gearing ratio. Tell the formula. Debt plus preference share capital divided by equity. Equity represents what? Equity share capital and resource and surplus. What will not come? Very good. Last one, debt service coverage ratio. EBI DTA divided by interest plus principal installment. Okay? That's it. Write down. Capital structure ratios. Capital structure ratios. Okay? Don't see the answers. Write down. First, debt equity ratio. That's it. Debt by equity. Debt equity ratio. Debt by equity. My question. Debt equal to long-term debt. Write down. Debt equal to long-term debt. Equity equal to equity share capital ESC plus PSC plus resource and surplus. Okay. Next, propriety ratio. Equity divided by total assets. Equity divided by total assets. Equity equal to equity share capital, the ESC, PSC plus reserves and surplus. Next, capital gearing ratio. Debt plus preference share capital divided by equity. Equity equal to ESC plus reserves and surplus. Next, debt service coverage ratio. EBI DTA, earnings before interest, depreciation, tax and amortization. That's the meaning. EBI DTA divided by interest plus principal installment. Can you go to the next one? How many ratios we completed? 2. Liquidity ratio, capital structure ratio. Next, write down. Activity ratio, most important one among all. Entire chapter, every problem, you take 100 problems never asked, you take 30-40 problems asked, 25 problems, so these will be 25. You can understand the importance then. The most important of all is activity ratios. Clear? Very, 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 very important for the exam. Every question will have a representation of activity ratio. Okay? So let's start doing it. First one. What is the first one? See there? Capital. Whenever we are talking about activity, activity represents turnover. Everyone, activity represent or turnover means. Turnover means. What do you mean turnover means? I will give example. One second. Listen. Turnover can have two meanings. Sales, second one is the cost of goods sold. When cost of goods sold? When stock is there, stock is unsold. Correct or not? Stock is? Means advertisement and other expenses are not yet incurred on them. It's only a stock of finished goods. Labeling, packing, not yet done. Listening? So therefore, on that, we cannot apply the sales as a calculation. COGS will be used. What will be used? Therefore, exam questions will be asked so many times. Cost of goods sold adjustment, every 5 problems or 2 problems ki cost of goods sold adjustment will be there. Listening? Listen now. What is the first one? Read the formula. Turnover by capital employed. Turnover by, that's not turnover by sales. Turnover or sales. Meaning. This or this. Turnover or sales. Divided by what? Capital employed. Very important. When I say capital employed, any investments made in other company shares, made in other company shares should not be considered into the capital. Sir, why sir? Listen, when I say capital employed in my business. Example, you are all the members of a company, shareholders. From you I have taken 100. From you I have taken, 100. Tell me, what is the capital raised? 100. What is the capital raised? 100. In this 10 rupee I invested in Reliance shares. 90 rupees I invested in my business. What is the capital employed? 90 only, not 100, because 10 rupees is not invested in your business. That's why capital employed means capital employed in our business. Listening? What is this? Capital employed means what? Everything. Equity, debt. Everything. You know what is equity? Tell me, what is equity? Equity share capital, preference share capital, resource and surplus plus debt is the total capital. Is the total. Like this you can do, or sometimes you can also do from the asset side. Sir, anyway, what is E? Hey, what is E? Capital employed. What is E? Employed means capital raised. Employed in assets. Employed in, therefore asset side also you can do. Instead of doing the capital employed using liabilities, you can also do using assets. Tell me, what is this? Plus minus will be called as what? Capital employed. Capital, whenever I say capital employed, long term capital employed only will be taken. What will be taken? So fixed assets plus current assets minus current liabilities. Very good. Next, capital employed should not include investment made in other company shares. You understood why? Whenever I say capital employed means what? In our business, how much you employ is important, not in others' businesses. Clear? Why? What is this? If you invest in other company, income coming from that other company is not sale, it's a dividend. Dividend is not coming in trading account. This is a trading account sales. Listening or not? Tell me, what is the formula for capital turnover? Turnover divided by all activity ratios. Turnover or turnover means comes in numerator. Comes in? This is a main mark you can remember. Turnover always comes in numerator. Listening? Yes, read. What is the next one? Tell the answer. Sales divided by fixed asset or turnover divided by fixed assets. Listening? Yes, okay. Next, working capital turnover ratio. Sales divided by working capital. The most important of all in this entire chapter, this. Almost every question these two will be there. Tell me, what is the first one? Debtors turnover ratio. Listen carefully. Debtors answer question they can ask in two ways. Listening? Yes, sir. One, they can give debtors, they can give sales, and they can ask you question. Or they will give the debtors velocity. Means a number of days they will give. We have to calculate the amount of debtor. We have to calculate answer. Shall I tell you how it will be? Listen. If a student spend 10 days on reading, he will get 100 marks. He will get 100 marks. As example, if a student spend 10 days, he will get 100 marks. Mr. A spent 5 days. How many marks he will get? 5 days is called as velocity here. Instead of giving the marks, they will give number of days. Or like this they will tell. A person will get 100 marks if he study for 10 days. Mr. A got 50 marks. How many days he would study? That is another way. This is debtor's velocity you calculated. Understood? Sometimes data they will give, we will calculate the velocity. Velocity they will give, we will calculate the amount. Listening? Yes, sir. You should remember, yes or no has nothing to do now. So you have to remember. So see, what is the formula? Debtors turnover ratio. 3 kinds they will give. Question clearly credit sales are given. Use the sales data divided by debtors. Sales should be credit sale. Because the debtors is linked to sale or credit sale. What generate debtor? Sales generate debtors, cash sale generate debtor, credit sale. Therefore, credit sale only should be considered there. Listening? Next, credit sales not given in the question. What we will do? Assume that all the sales are on credit. Assume that all the sales are. That's how institute will do the answers. Next, what is the next one? Hey, 3 formulae are there. Read the second one. Sales divided by average data. When 2 years data is given, how many years? When 2 years data is given, you should not consider 1 year, you should consider the data of 2 different years. You should consider the data of 2 different years. So technically the logic is very simple to tell that whenever they give debtors turnover, 2 years data is given, take debtors, average debtors. Loudly. Now they have given only 1 year data and average also they did not give. What we should take? First formula. So 2 years data given, second formula. 1 year data given, first formula. Listening? They gave velocity, third formula. Debtors into 360 divided by sale. Debtors into 360 divided by sales. Understood the point clearly? Means what? Debtors into 360 divided by sale means total debtors by total sales means you will get 1 day value. For 360 days, how much we are going to calculate? Logic, all this keep away. Remember, what is the formula? Debtors into 360 divided by sale. Clear? When this has to be used? When the debtors velocity. See here, that's why. Third formula is expressed in periods. 3 months period, 2 months period, 1 month period, like that they will give. Listening?
Yes, sir.
So this is called as debtors turnover. Same thing. Use common sense and tell. We are doing stock turnover ratio. Whenever I say stock, it's not yet sold. Not yet. So sales will not be there. What will be there? Cost of goods sold will be there. Same. Read. Divided by stock. If normally given, 2 years data given, cost of goods sold divided by average stock. Average stock. If debtors velocity plus stock velocity they have given. What velocity? Stock velocity they have given. How to do? Stock. Instead of debtor, stock. Whenever they give stock or average stock, depending on the data given. Divided by sales into 100. Into 100. Into 360. I'm very sorry. Into 360. This is the answer. Listening everyone?
Yes, sir.
Understood?
Yes, sir.
So with this we completed debtors turnover. Next stock turnover also completed. Everyone remember all the formula?
Yes.
Tell me what is the formula for capital turnover? Sales divided by next one. Fixed assets turnover. Sales divided by fixed asset. Also called it turnover by fixed assets. That's it. Listening? Working capital turnover. Debtors turnover. Sales divided by debtors. Whenever sales means credit sale. Credit sale divided by debtor. Credit sale divided by average debtor. Or debtors divided by into 360. Understood?
Yes.
Write down. Keep the heading activity ratio. Okay, first one capital turnover ratio. Always turnover should come in numerators. Okay. Next one. So first one what you completed? Capital turnover ratio. Next one. Fixed assets turnover ratio. Tell the formula. Sales by fixed assets. Next. Working capital turnover ratio. Okay, done. Next. Fourth one. Adhe main. Debtors stock is main. Debtors turnover ratio. Don't write sales, write credit sale. For me, I will teach, I remember. But student may forget. He will write sales in exam. So credit sale. Credit sale divided by debtors or credit sale divided by average debtor. Whenever exam question comes, maximum try to calculate average only. Don't write direct debtors value. Okay. Next, or debtors into 360 divided by credit sales. Again, one thing, Numerator what you have written? Numerator. Debtors. Third formula numerator. That reverse na, the days we are doing. Debtors divided by sale. There also try to put only average debtors. Okay. Next. Stock turnover ratio. Cost of goods sold divided by stock. Cost of goods sold divided by stock. Next. Cost of goods sold divided by average stock. Next one. Stock into 360 divided by sales or cost of goods sold, depending on the data given. If COGS is there, COGS you use. Done? Next. Not yet completed. Still one more is there. Creditor turnover ratio. Tell me, guess the answer. Creditor turnover ratio. When it is dealt with creditor, we are talking about sales or purchases. Loudly. Debtors turnover ratio, what is the formula? Sales by average debtor. Main formula. Sales by. Now guess the creditors turnover ratio. Purchases by average creditors. Ante, over. Whenever we say purchases, which purchases? Credit purchases only. Cash purchases anyway creditors will not generate. Okay, na? Can you go to the next one? What we completed now? Activity ratio. Next one, easy area, but very regularly tested area. Write down. Profitability ratios. Very, very important again. Profitability ratio. Profitability ratio. Shall we? Yes, profitability, this is expressed in percentage. This is expressed in percentage. What is this profitability ratio? How much profit you are generating is the profitability ratio. Gross profit ratio. Here, one second. In this formula, sales will come in denominator. Sales will come in denominator. Gross profit ratio. Gross profit by sales into 100. Next, net profit ratio. Net profit by sales into 100. Clear? Next, operating profit ratio. EBIT by EBIT. Operating profit means EBIT by sales into 100. COG is to sales. COG is by sales into 100. Listening? That's it. Answer over. Next, return on capital employed. Morning we read. What is the return on capital employed? Return by capital employed. Return on equity. Return by equity. Over. Right down. Completed? What is the fifth one? When I say return on capital employed, two types of formula are there. This is return on capital employed, return for every one, debentures and equity. Therefore, formula numerator what and what is coming? Morning A, we read one formula, return on equity, return divided by equity. Equity require a return called as a PAT. I told her not. Answer. Here, return on capital employed represents capital employed by both debt as well as equity. Capital employed by both. Now tell me, debt holders want profits are their interest are. Whether you make profit or you make loss, you pay me interest, that's it. Whether you will live or die also they don't want. I gave you loan, you pay me interest, that's it. Correct? So numerator for them interest is there. Equity shareholders don't want EBIT, EBT. What they want? PAT. So tell me, capital is given by whom and whom? Equity and debt. Equity and debt. Equity shareholders want profit after tax. Debenture shareholders want interest. So profit, PAT plus interest divided by capital employed. Listening? Morning, whatever we have seen, EPS divided by BVPS, that is return on equity formula, return by equity. Sorry. Tell me, what is the formula? Return by equity. In this case, return means profit after tax. Listening or not? In this, return means profit after tax. Listening? In this case, what is the denominator? Capital employed by whom? Equity and debt, both equity and debt. Both equity as well as debt. Both equity. So numerator also should contain the return to both equity and debt. Debt wants what return? Interest return. Equity wants what return? Profit after tax return. Both together is a numerator. Listening everyone? That's it. Very, very important formula. Okay? Done. Next area. This is all analysis, not for revision classes. What is this formula? Why this formula came like this? Return on capital employed. This is all the analysis. Okay? Why that formula came like that? ఈ మహాభారతం అంతా చదివితే పోతారు మొత్తం పోతారు సో డోంట్ రీడ్ ఆల్ దీస్ థింగ్స్ నౌ రెగ్యులర్ క్లాస్లో వీ విల్ ఎక్స్ప్లెయిన్ లైన్ వర్డ్ వాట్ ఈస్ దిస్ ఫార్ములా హౌ ఇట్ కేమ్ నెంబర్స్ కేమ్ ఎట్ దట్ టైమ్ వీ కెన్ స్పెండ్ బట్ నౌ ఇట్ ఈస్ నాట్ ఎట్ ఆల్ రిక్వైర్డ్ ఓకే మెయిన్ ఫార్ములా డిడ్ యూ అండర్స్టాండ్ క్లియర్లీ యా అది ఇనఫ్ అయ్యా ఎగ్జామ్ యూ విల్ పాస్ ఫస్ట్ లాస్ట్లీ వాట్ ఈస్ దిస్ వాట్ రేషియో no need to write. You can know all these things. EPS formula, earnings by number of shares. DPS, dividend by number of shares. MPS, market value by number of shares. Next, dividend payout. You know na, D by E into 100, dividend payout ratio. Retention ratio, retained earnings per share divided by earnings per share. PE ratio already morning we have done na, MPS by EPS. No need to write this. Shall we start the problems now? That's it. Beyond this, you will not find any ratio in the exam. Okay? But in this you need to apply mind. Missing figures calculation you need to do sharply. Shall we start? Let's take practical illustrations in the chapter. See, first question is debtors inventory turnover ratio, debtors turnover ratio question is there. Shall we start? Sir, practice this chapter very well because chapter will come for 8 marks and another sad truth is compulsory question it will come. Clear? So you can't leave this chapter and go to exam. Understood? So very extremely dangerous chapter in the entire syllabus because 8 marks ki guarantee chapter and second danger point is compulsory question they are giving this. So you can't escape ratios and go to exam. Okay? Let's see. Easy. You follow properly all the formula what I said. Follow the notes properly. Study material you do, what you have done before? Normally just asking. What you have done before without doing study material? Sir, okay, see here. When you are not doing study material, you are driven towards a failure. See, total sales, all credit, clarity is there. Means all sales are on credit. Sales of a firm are 6,40,000. Gross profit margin 15%. Current ratio 2.5. Firm's current liabilities are 96,000. Inventory 48,000. Cash 16,000. Current liability details they have given. Listening, huh? Yes, current liability how much? 96. Current assets, investments and cash, sorry, inventories and cash, how much? 64,000. How much? 64,000. 48,000 plus 16,000. Okay. Determine average inventory to be carried by the firm if an inventory turnover of 5 times is expected. 360 days you take. Formula what we have written? Inventory turnover ratio. What is the formula we have given? Hey, inventory turnover formula. Inventory turnover, COGS. What is it? COGS divided by what? Stock, average stock? Average stock. Correct or not? Third formula? Third formula. Stock or average stock into 360. Instead of 365, you have to write 360. Clearly, I have given 360. 360 divided by what? COGS. If nothing is given, sales you will take. Clear? Yes, sir. Read the question first. After that, we will start with the solution. Read the question properly. Please read the question properly. Okay? First tell me the answer. Hello, everyone tell me. What they have given in the question? What they have given in the question? What is the data given in the question? Sales given? Okay, credit sales. How much? Cost of goods sold given? Cost of goods sold given? Yes. Gross profit margin is there means when you reduce the profit margin from the sales, balance will be the COGS only. Correct or not? So they have given. Listening? Okay. See here. I told you easy adjustments I will show you directly. Tough adjustments are there. I will make you to mark them. Later you do. I told you the problem with ratios. This chapter is very easy once you understand. But if you start doing each and every point, it becomes very difficult to complete the syllabus. Okay? I will explain the problem. See here. First, step number 1. Calculation of cost of goods sold. Calculation of? Okay. Tell me. How much is the sales given? They only given gross profit margin is how much? So, 5,44,000 will be cost of goods sold. Step 1. Everyone understood clearly? Next, step 2. See there. What is this? Average inventory using the stock turnover ratio. Tell me normally what is the formula for stock turnover ratio? Cost of goods sold divided by average inventory. Correct? What is the cost of goods sold? Take calculator. Cost of goods sold divided by average inventory. How much is this answer given? 5. 5. Correct? Tell me. Cost of goods sold already you calculated. How much? 5 lakh. divided by average inventory equal to 5. So average inventory equal to 5,44,000 divided by 5.
1,08,800.
Answer over. That's it. Like that on calculator you tell me debtors. Listen. I will tell you why. What is the current liabilities total? Loudly.
96,000.
Inventory 48, cash 16. Debtors not given. Using current ratio we will calculate as a balancing figure. Listening, sir, one point also if you miss gone. Please listen carefully. I will roughly do here. You will help me in numbers. Tell me. What is the formula for current ratio? Current assets by current liabilities equal to 2.5. Current liability already given. 96,000. Tell me current assets. 2,04,000. 40,000. In that, how much is the inventory and cash?
64,000.
Remove that.
1,76,000.
That's it. Answer over. What is 1,76,000? Debtors in the company is 1,76,000. Correct? Okay. We want debtors, average debtors. Everyone. Average debtors. See here. See here once. Here is it. See the question. Opening debtors is 80,000 they have given. Why they have given opening? Because we want debtors, average debtors. What do you mean average debtors? Opening debtors plus closing debtors divided by 2. Clear? Already we got the closing debtors value. How much? 1,76,000 plus 80,000 divided by 2. That's it. 1,28,000. Using this can we calculate or not? That's it. Average debtors is 1,28,000. So next, what is the next one he is asking? Can you do that number of days? Yes, do. Debtors, average debtors divided by credit sales into 360. What is average debtors answer? Just now I have shown average debtors 1,28,000 into how much? 360 divided by credit sales how much? 6,40,000. 72 days. Let's check your answer. Perfect. Over. Problem number 1 completed. Understood the answer? Like this you need to present in the exam. For this this question actually came for 6 marks in exam. For the first one they will give 1 mark. Second one 2 marks. Third one 2 marks. Fourth one 1 mark. Like this they will give. If you randomly put the numbers and do gone, for what they have to give the marks? They will only get confusion. Understood? So known answers also will get lesser marks. That's why first concentration in FM we need to give on presentation. How to present the answer. Step by. See here. Now if you write like this, clarity is there or not? So which step after which step has to come? First calculate gross profit and COGS. Next calculate the average inventory. Next calculate the average debtors. Lastly average collection period. With this answer will be completed. Now 6 marks you will get. There is no chance of losing the marks. Clear? Next. Take practical problem number 2. Practical question number 2. The capital structure of Beta Limited is as under. Equity share capital of rupees 10 each, 8 lakh. 9% preference share capital is rupees 10 each, 3 lakh. Totally how many lakhs? 11 lakhs. Okay. Additional data. Profit after tax. Tax is how much percent? 35%. What is the profit? 2 lakh? 70,000. Depreciation 60,000. Equity dividend 20%. Market price 40. Compute the following. Dividend yield on equity shares. Dividend yield on equity shares. Sir, what is dividend yield? Doubt will come or not? Dividend by market price is called as dividend yield. Dividend will be paid on par value, market value. Dividend will be paid on par value, market value. Loudly. That's called as a dividend amount. Okay. Yield means always calculated on market value. That's why, listening, K equal to formula D1 by P naught you will write, not face value. This is called as dividend yield. Understood the point or not? Okay. Dividend yield on equity share. Coverage of preference and equity dividend. Coverage of preference and equity dividend. Okay, what is this? I will tell. Next one. EPS, earnings per share. P ratio. You know what is the P ratio, correct? What is the P ratio? Price by market. MPS by EPS. EPS. EPS means what? Total earnings divided by number of shares. All these are on miscellaneous ratios. Which ratio?
Miscellaneous.
Read the question first. We'll start with the solution. Okay? Right? You come to miscellaneous ratios. Come to miscellaneous ratio. Which ratio? Miscellaneous ratios. Write down. Preference dividend coverage ratio. Preference dividend coverage ratio. Very, very easy. Shall I tell you what is the formula? Dead easy, not easy. Preference shareholders will get dividend from which profit? EBITI, EBTI, EATI. Answer over. EAT by preference dividend. PAT by preference dividend. Okay, va? Yes, next one, write down. 8th. Equity dividend coverage ratio. Equity dividend will get the equity dividend out of what? EBITI, EBTI, EATI. Answer? No, EAT minus preference dividend. Also called as EAESH. I think you know this, right? Yeah. Write like this. Okay? So EAT minus preference dividend divided by equity dividend. I told you 1 or 2 formulas may not come. Those also we are writing. First tell me everyone, did you understand this or not? Huh? Now come back to the question. Come back to the question. Tell me, what is the question he is asking? What is the first one? I told you the formula also. Tell me, what is the profit? See there, what is the profit? 2,70,000. Equity dividend is how much percent? Equity dividend how much percent? 20%. Market price 40. Dividend 20% will be paid on par value. So 10 into 20% divided by 40. 0.05. Also called as how much percent? 5%. First point, everyone understood the dividend yield or not? Done. Next one. What is the second one? Coverage of preference and equity. Just now we calculated, na? Calculate. Profit after tax how much? 2,70,000 divided by preference dividend. See there, see the question. 9% on 3 lakh. Tell me how many times? 10 times. Second answer, preference is 10 times. Now equity dividend coverage ratio you tell? 2,70,000 minus 27,000 divided by equity dividend. Tell me how much equity dividend we need to pay? 20% means 2 rupees on each share. How many shares are there totally? 80,000. Into how much? 2 rupees. Means how much? 1,60,000. 1.52. 518 means 52. Correct? So we calculated this 1.52. First one 5%, next one 10 times, next one 1.52. Correct? Calculate the EPS. How to calculate EPS? How to calculate EPS? Profit after tax minus preference dividend. Tell me how much? 2,43,000 divided by how many shares? 80,000. 3.04. 3.04. Price earnings ratio. What is the formula? MPS by EPS. 40 by 3.04. 13.16. Over. Everyone, have you understood? See the answers now. 5%. See there. 5%. 3.04. 13.16. 10 times or 1.52 times. Answer over. That's it. Shall we go to the next one? Next. Take illustration number 6. I am going in the sequence of my notes. Very, very popular way. Because do you know what is this question? Missing data they will give you, you should prepare balance sheet. For very, very famous kind. Fancy questions that comes in exam. Let's see. Following information has been provided from the books of Lakshmi Private Limited for the year ended. For the year ended 31st March 2023. Net working capital. You know what is a net working capital? Current assets minus current liabilities is called as net working capital. Working capital means current assets. Net working capital means current assets minus current liability. Means current assets net of current liability is called as net working capital. Next, bank overdraft. Bank 80,000. Next, fixed assets to propriety ratio. You know what is this fixed asset by propriety ratio? Normally proprietary ratio means what? Equity by total assets. Here clearly fixed assets they have given. Means what? Equity by fixed assets. Equity by how much? 0.75. Resource and surplus 3,20,000. Current ratio 2.5. Liquid ratio 1.5. You are required to prepare the summarized balance sheet. Assuming that there is no long-term debt. There is no. Sir, they have given bank overdraft. Overdraft is a short-term debt. That is including current liability. Including. This is the data given. Will you think and try to do? At least will you fill some part of balance sheet? Start. 4 minutes time. Question came for 7 marks in exam. What is the only new point we are learning here? No. Fixed assets to proprietary. Normally, what is the formula for proprietary ratio? Equity by? Here, what they have given? Fixed assets to proprietary. Fixed assets should come on numerator. Debt to equity, debt by equity. Fixed assets to proprietary. Fixed assets should come on numerator. Okay? Sir, whenever 2 comes, TO2, whatever comes on the prefix should come on numerator. Here, what is the question given? Fixed assets to proprietary. And fixed assets should come on what? Numerator. And they are giving reverse formula. First tell me, calculate inventory value and tell me. Stock. Why they have given liquid ratio? Liquid ratio is given because there is a stock. That's why. Whenever liquid ratio is given, first indication is stock is there. I told you or not? What is a liquid asset? Huh? How much? Okay, I will see. I didn't know the answer. One person said inventory is 3,20,000. Others, if you did, comes from that. 3,20,000, yeah? Okay. Have you done? See here. I will tell you how to do now. If you have done in the same way, very good. See here. Shall I? First tell me, from the available data only we need to do the question. Missing figures questions, na? See here. If you see, I will tell you in 2 minutes entire answer. Shall we? See there. Working capital given a net working capital. Means what? Just now I told what is a net working capital. Current assets are current assets minus current liabilities are. So current assets minus current liabilities is how much? 80,000. Correct? Done. 1 point completed. Next. current ratio given. Current ratio means what? Current assets by current liabilities equal to 2.5. Equal to? Now, current assets minus current liability is how much? 4,80,000. So, simply to tell, current assets divided by current liability equal to 2.5. Current assets equal to 2.5 current liability. Or I can also write like this. Current liability, listening guy? Current assets can also be written as 4,80,000 plus. Correct? Everyone? Can I write like that or not? Now you answer my question clearly. Have you done up to the current assets calculation? Tell me, how much you got? How much? Tell me now. Current assets equal to how much of current liability? 2.5. Current liability, how to calculate? Current liability, how to calculate? Current asset equal to 2.5 current liability. Tell ya, I am asking you, how you have done?
8 lakh minus current liability.
Totally, 1 second, listen carefully. What is 8 lakh? Current? How you got current assets 8 lakh? Have you substituted that or not? So tell me, current assets can also be written as what? 2.5 current liability. So 2.5 current liability minus current liability equal to 4,80,000. 1.5 current liability equal to 4,80,000. Current liability equal to 3 lakh. What is 3,20,000? Everyone done up to here? I don't want to tell the answer. That's why I'm asking you what you have done. 3,20,000. But we know one thing. Current asset minus current liability is 4,80,000. In that current liability is how much? 3,20,000. So current asset equal to 4,80,000 plus 3,20,000. How much? How much? Now, next question for you. Liquid ratio they have given. Formula. Okay. We already know liquid asset equal to current liability value. We already know 3,20,000 into 1.5. Tell what yes answer. 4,80,000. 4,80,000. Liquid asset is 4,80,000. What is a liquid asset concept? Current asset minus stock equal to 4,80,000. Anyway, prepaid expenses not there. Already we know how much is a current asset. How much? 8 lakh minus stock equal to 4,80,000. Stock equal to 8 lakh minus 4,80,000. 3 lakh. Stock is 3,20,000. Everybody understood the calculations or not? Tell me. Balance sheet la asset side what we need? Balance sheet la asset side what we need? With this we will calculate that. Okay, next one what we need? Current assets. Current assets la what and what will be there? Stock will be there. Other current assets will be there. What will be there? Stock will be there. Other current assets will be there. Listening? Other current assets will be a missing figure, balancing figure. We should next calculate the fixed assets. Tell me what is the formula for fixed assets to proprietary? Fixed assets divided by proprietary funds. Fixed assets divided by proprietary funds means what? Equity share capital plus reserves and surplus. Equity share capital plus? In the question did they give equity share capital? No. Just now I told. Equity can be calculated in two ways. Way number one, through the assets side, through the liability side. Liability side is the equity share capital plus reserves and surplus. Asset side, fixed assets plus current assets minus current liabilities minus long-term debt. Minus? Because already given there is a long-term debt or no long-term debt. Loudly. Anyway, that will be 0. So what we have to do? Fixed assets plus net working capital. Fixed assets plus this calculations I will show you how to do. Please see here. I want one answer. Did you really understand current assets calculation?
Yes, sir.
Current assets calculation.
Yes, sir.
Liquid assets calculation.
Yes, sir.
Stock calculation.
Yes, sir.
First 3 steps everyone had a full clarity.
Yes, sir.
Next. See here. Let's not waste time. I will show you here itself. First. This 3,20,000, everyone understood? Tell me, current ratio how much given? Current ratio is called as what? Current assets by current liability. Current assets by current liability 2.5 means current assets can be written as what? 2.5 into current liability. Current asset minus current liability 4,80,000. In that, current asset is 2.5 current liability. In that way, we calculated 3,20,000 as a current liability. Correct? Next, what is this? Calculation of creditors. Easy calculation. Na? Total current liability how much? Bank overdraft is 80 means balance will be creditors. Listening? How much is a creditor? Next, current assets. Current asset minus current liability 4,80,000. Balance will become the 8 lakh rupees current assets. Up to here understood? Next, what is the next one? Stock. Using what we calculate stock? Liquid ratio. Liquid? What is the liquid ratio formula? Liquid assets by current liability. Liquid asset means what? Current assets minus stock divided by current liability. Current liability we know, liquid assets we know. Stock is a missing figure 3,20,000. Up to here understood? I think every one of you might have understood up to here clearly. Every problem will have only one new step. That new step in this question is fifth one. What is this? Proprietary fund. Tell me, what do you mean by proprietary fund? Equity, share capital, reserves and surplus. So both are. Both together is called as what? Proprietary fund. In proprietary fund, two components will be there. Share capital, reserves and surplus. Share capital. Already in the question, reserves and surplus is given. If you remove that, share capital value will come in balance sheet. Correct? Tell me, fixed assets to proprietary fund, how much? And a fixed assets equal to 0.75 of the proprietary fund. Proprietary fund equal to fixed assets, current assets, minus current liability, minus long term debt, minus this is assets route or liability route? Hey. This is assets route or liability route? Assets route. What is this? What is this? What is this? Total assets. What is this? Minus what liability? Minus what? Balance will become what? Proprietary fund. This is the way. This and this total can be proprietary fund. But when it is not given, you have to do like this. Clear or not, everyone? So, proprietary fund equal to, tell me, how much is a fixed asset? 0.75 proprietary fund plus current asset minus current liability, we already know the value. 4,80,000. We calculated proprietary fund as how much? 19,20,000. This is important adjustment. Understood the adjustment clearly? Tell me how to do? Fixed assets to proprietary fund. What is the formula? Fixed asset by proprietary fund equal to how much? And a fixed asset equal to 0.75 of the proprietary fund. Correct? Tell me, proprietary fund means what? From the assets route. Tell the liability route. Tell the liability route. Anyway, in this question, what is not there? So, what should be the answer? Equity share capital plus. But equity share capital not given. Therefore, we are coming through which route? Assets route. Which route? Tell me. Proprietary fund equal to fixed assets. Fixed assets is how much? 0.75 of the proprietary fund plus 4,80,000 minus already this one is 4,80,000 minus long term debt is 0. Finally, we got this. Okay. Equity share capital. Proprietary fund is equity share capital plus reserves and surplus. Equity share capital will be 16 lakh. Calculation of fixed assets. Already they said fixed assets is how much percent of proprietary fund? 0.75. 14,40,000. Balance sheet prepared. Answer over. Understood the point clearly? Observe the last 3 steps properly. We'll go into the next one. After seeing these questions, what you have to understand? Practice is required. Ratios analysis than any discussion in class. Even if I tell 10 times, 11th time you have to apply. Clear? That's why this chapter is the most easiest chapter, provided student practice. Most difficult chapter, provided they don't practice. Clear? Means till you go to examination, at least daily, take one ratios problem and do every day. Starting from today. Night before sleeping or morning after you wake up, do one ratios chapter every day. Listening? A small or big, okay, that's your wish. But take one question on ratios and do consistently every day. You will become a champion in ratios analysis after some number of days. 6-7 days after, you will start working properly. Listening? 11 days, you will complete all the 11 questions there. After that, do RTP, MTP, additional questions, whatever you want. You will solve any question that comes in exam. Clear? Ante? Because anyway, the formula what they given is same. Just you need to apply in that particular area. Correct or not? That's it. Sir, anyway, understood this question clearly? Yes, balance sheet understood? Yes, tell me, balance sheet, what and what is there? Fixed asset, stock, other current assets is a balancing figure. Okay, it's a balancing figure. Equity share capital is also bank overdraft to creditors. All these we calculated. Clear? Done. Please come to practical problem number 4. This is a 8 marks question given in exam already. Let's see. Ganpati Limited has furnished the following ratios and information relating to year ended 31st March 2023. Sales 60 lakh, return on net worth, tell me, return on capital employed, formula. Return by capital employed. Return by? Return on equity. Return on equity. Return on equity. Return by equity. What is the return? Profit after tax. Equity another name net worth. Another name of equity is net worth. Tell me what is equity? Equity share capital plus preference share capital plus reserves and surplus. Next, continue. Income tax rate 50. Share capital to reserves. Now tell. Fixed assets to proprietary fund, formula fixed assets by proprietary fund aithe. Share capital to reserves, what is the formula? Share capital divided by reserves. Understood? Current ratio, net profit to sales. What is net profit to sales formula? Net profit by sales. Inventory turnover 12. What do you mean 12? They have given in days. Inventory turnover times. They have given in times. Okay. Based on what? Cost of goods sold. Tell the formula. First 2 formulas you tell. Cost of goods sold divided by sales. Cost of goods sold divided by average sales. What sales? Average sales. Here average sales can be calculated or cannot be? Cannot be. Therefore you will take directly sales. Now did you understand when to take sales? When to take average sales? Next, continue. Interest on debentures. Receivables, payables. Calculate the operating expenses for the year ended 31st March 2023. Prepare a balance sheet. Read the question. Five minutes time. To what extent you can fill the balance sheet, you fill it. Everyone, are you doing? Try it, another 3 more minutes. Try to extract as much data as possible. Practice in the class. Completed? See here. So time given for 8 marks question is over. See here. Question number 4. Shall I show the answer? One by one, let us first understand. Sales given, return on net worth given. Net worth represents what? Equity share capital plus reserves and surplus. Return on net worth means what? Profit after tax divided by equity equal to 25. Correct? Means, see here, profit after tax divided by equity equal to how much percent? And profit after tax is 25% of the equity share capital and reserves and surplus. Correct? Share capital to reserves and surplus is how much? 7:3. And in a 10 rupee total, 7 rupees is share capital, 3 rupees is debt capital. Reserves and surplus. Correct? Okay. Now answer. Net profit to sales, inventory turnover, cost of goods sold, interest on debentures. Okay. Next, receivables, payables. All this is a data given. Using this, they are asking us to calculate what expenses. What do you mean by operating expenses? All operating expenses put together is called as cost of goods sold. Is called as a all together. When added together, will comes to 18 lakhs. See here. Which question? Question number 4. One by one. See here. See, calculation of share capital and reserves. See the answer here. Given return on net worth, how much? Question, what is given? Return on net worth. And return by net worth equal to 25. Return means what? Profit after tax. Divided by net worth equal to 25. So, profit after tax given in the question. See here, they have given net profit to sales. How much? 6.25. Sales is given or not? Answer. Sales given 60 lakh. Okay. On that 6.25% is the net profit. Calculate. 60 lakh into 6.25. That's how we got it. No rocket science. Everyone understood? Now I will ask a question. 60 lakh is the sales. Net profit is 375 means whatever the balance is there, we will call it as a total expenses, not operating expenses. We call it as a total expenses. In that interest cost all will be there. Hey, listening? Tell me, how much is the sales? How much is the net profit percent on sales? So net profit is how much? Net profit means indirect expenses are also deducted. Correct? Operating expenses mean direct expenses or indirect expenses are. Direct expenses are called as operating expenses. Hello, listening? Tell me, how much is the sales? How much is the sale? How much is the cost of goods sold? 18 lakh. Next, listen carefully. EAT already we calculated. How much? 3,75,000 is after deducting a tax. After? So EBT is a double. Correct or not? Already question like interest is given. How much? 60,000. So EBIT is how much? 8 lakh 10. EBIT 8 lakh 10. COGS all these they have given. Missing figure is the operating expenses. How many of you did this? No one. Adi. Did you understand how to do? If next time if the question is given in the same way, that mindly you should click this point. Clear? What they have given? Sorry. What they have given? So first return divided by net worth. Return divided by net worth equal to? Okay. So net worth return equal to profit after tax equal to 25% of what? Net worth. This is the thing given. Clear everyone? On that basis we calculated each and every point here. See. Return by net worth. Return calculation already we know. 3,75,000. How you got this 3,75,000? Net profit to sales given. Using that we calculated net worth. Calculated? What is net worth? Meaning equity share capital plus reserves and surplus. Use common sense and tell 15 lakhs is the net worth. 15 lakhs is the net worth of what and what will be there? Plus reserves and surplus. In that equity component is how much? 7 by 10. Debt capital, reserves and surplus will be 3 by 10. So 70%, 30%. 15 lakhs into 70%. 10 lakh 50 is the share capital. 4 lakh 50 is the reserves and surplus. Clarity, yeah? First tell me, this operating expenses calculation understood? Answer. Sales we have calculated, given. Next one, cost of goods sold, given or not given? Given. But other operating expenses given, not given? Not given. For that reverse calculation we have done. Already what we have? Here they have given clearly that income tax rate is how much percent? Profit after tax means after deducting that 50% only we got this. And the remaining 50% is what? Tax. So EBT is this much. Interest they have given. EBIT we calculated. These two we have. Balancing figure is the operating expenses. Understood the answer? Next. Debentures value. Interest on debentures. See here. See here once. Value of debentures. Debentures is how much? 60,000. Interest on debentures, how much? 60,000. Okay. So see here once. If you listen, I can explain. See here. What is the total share capital? 10 lakh 50,000. Total of reserves and surplus? 4 lakh 50,000. See the screen once. Balance sheet clearly they have given that. What they have given? Interest on debentures is how much? Interest is how much? 60,000 if it is equal to 15%, 100% can we calculate or not? Tell me how much? 4 lakh is this 4 lakh. Clear? Calculation of stock using stock turnover ratio. What is the formula for stock turnover ratio? Cost of goods sold by stock. Average given or not given? Not given. Stock 1 lakh 50. Calculation of what? Cash. Current ratio how much? 2. Current assets by current liability. 2 into current liability. Current liability lo only one thing is there. What is that? Payable. So 4 lakh. 4 lakh lo already stock is 1 lakh 50. Cash is already listening everyone. So cash we need to calculate. Receivable already given in the question 2 lakh. So balancing figure is the cash. We prepared the balance sheet. Clear? What is the only important adjustment in this? This adjustment, if you understand, 80% of the answer is completed. Even if you could not get the final answer, out of 8 marks, at least you will get 6 marks. Clear? Preparation of balance sheet is not the criteria. Step by step they will give the marks. If you do this, they will give 1 mark. If you do this, 2 marks. If you do this step, 1 mark. If you do this, 1 mark. Like that they will give. So even though the final answer is wrong, because of doing the steps in a consistent order, you will get the marks. Clear everyone?
Yes, sir.
Okay, that's it. Sir, everyone understood this problem clearly, yeah? Like this you do hundreds of problems, ratios concept is same. Did you understand all the formulae first?
Yes, sir.
Concept did you understand overall?
Yes, sir.
What you have to do later? Practice, that's it. FM, once this is completed, now 2 days after I told I will put a test or not? Before that, what you have to do first? Ratios chapter, all the 11 practical questions you have to do first. Clear? Like this, you take any number of problems, same concept. Missing data will be there, you need to fill that using the ratios. You have to practice. Okay. Today, after class, once you go home, first thing you have to do is take the ratios chapter and do all the practical questions. Listening?
Yes,
Except the 11th question. 11th question, there is a mistake. Okay? 10 questions. In that 10, already 4 we have done now. You have to do only another 6. Those 6 also nothing great. Practice. Okay? You practice and complete it. Everyone understood the overall idea of the ratios chapter or not? So, next one. So, the next chapter we are going to start. The name of the chapter is Capital Budgeting. First, in this capital budgeting, these are the models we need to do. Okay. Accounting rate of return, also called as average rate of return. Second one, payback period. Next one, NPV, IRR, profitability index, PI, modified NPV, modified IRR, annuity benefit and annuity cost, equated annuity benefit, equated annuity cost. These are the various concepts that we need to cover. Listening, as I said, 2 lectures we are going to cover capital budgeting. One today and another in the next. In this session, we are going to cover all these concepts. I am not going to leave even a single concept. Listening, all the illustrations in the study material will complete. Next session, practical questions will complete. So that everything will be complete also in capital budgeting. Shall we open the capital budgeting study material? This is the only chapter where study material we will do both illustrations and practical questions, even in revision, owing to the importance of this chapter. Okay. Other things aside, please come to study material content once. Shall we? Okay. Tell me, what is the name of the chapter? Capital budgeting. In the study material, the name is investment decisions. Okay. Let us begin. One by one, illustration on illustration, let us do. Okay. First, keep the heading number 1. Accounting rate of return, also called as average rate of return. Accounting rate of return, also called as average rate of return. Two branches. Original investment basis, average investment basis. Original investment basis, average investment basis. Okay, now see here, what do you mean by this? Let me explain. ARR can be calculated in 2 ways. ARR can be calculated in 2 ways. One, original investment basis, also called as a opening investment basis. Second one is a average investment basis. Which basis? Average investment basis. Listen carefully. Do you know the formula for average investment basis? Anyone in the class? What do you mean by average investment? Opening? No, wrong. So you did not do before. At least do now. Or else gone. So, listen carefully. Yes. No, 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 no. So see here. Average investment basis, original investment basis, or opening investment, anything you can call. See here, I will explain what is the meaning. ARR la, A you remove. What is the remaining to? Rate of return. Rate of return, also called as a return on investment. Return on, tell me, what is the return on investment formula? Return divided by investment. Which one? Return divided by investment. Everyone, return divided by investment. Therefore, average rate of return means what? Average return divided by investment. Average return divided by, that is one way. Okay. Another way is average investment, average return divided by average investment is another model. Okay. 2 types of formula are there. See here. See here once. accounting rate of return. Okay, also called as a average rate of return. I want every one of you see here. What is this? Average return divided by original investment. This is one formula. Listening? Write down. This is one formula. Okay. Second, average return divided by average investment. Okay. Average investment. This is the second concept. This is that. Divided by average investment. Shall we do it? I will tell you how to do this. Below write down. Average investment is equal to opening investment plus closing investment. This one I am writing. Okay. Opening investment plus closing investment minus salvage value divided by 2. Divided by 2. That's here half. Plus salvage value. Don't ask any reason now. This is not the time to learn the reasons. This is the time to do the questions and answers. Okay. Start again from the beginning. What concept we started first? Tell me. Average rate of return question comes in exam. You can do it in how many ways? 2 ways. Way number 1. Original investment basis. Average investment basis. What is the original investment basis formula? Average return by original investment. Next one. Average return by average investment. What is the formula for average investment? Opening investment plus closing investment minus salvage value divided by 2 plus salvage value again. Reasons, please. It will take a lot of time if I start telling the reasons for that. Okay. In the notes I have clearly given. Main notes I have given the reason. Each C. Diagrams I have given fully. Derivations I have given how the formula is derived. So this is not the time to learn about all those. Okay. So let us stick on how I need to present in exam if a question comes. Okay. So first, everyone understood both the concepts or not? Read the formula now. Average profit after tax by original investment. Next one. Average profit after tax by average investment. Original investment minus salvage value. Also called as the opening investment plus closing investment minus salvage value. Plus salvage value plus working capital changes. That not required, just salvage value. Up to here, understood? Let us do the question now. Please take example 7. Page number 7.23. See this. Suppose Times Limited is going to invest in a project, a sum of rupees 3 lakh, having a life of 3 years. Salvage value of the machine is how much? 90,000. Profit before depreciation is how much? 1,50,000. Profit after tax and the value of investment in the beginning and at the end of the year is as follows. Okay. Profit before depreciation, profit after depreciation, value of investment, investment, opening investment, closing investment. Now you please tell me the answer. They are asking us to calculate the ARR. I will ask you one question. In calculator you do and tell. Tell me. What is the first basis? What is the first basis? See and tell. How much I invested originally? How much I invested originally? 3 lakhs. Okay. First I am writing here. As you said, I am writing here. How much? Okay. What is this? Original investment. Now tell me. What is the profit after tax? Nothing is given. Tax, nothing is given. So profit after depreciation is assumed as a profit after tax. Tell me how much? Second year? Third year? Average is how much? 80,000. So tell me. Profit after tax average is 80,000. 80,000 divided by 3 lakh into 100. Tell the answer. 26 point. That's it. This is version 2. Total investment basis. Have you got the understanding? Next. Tell me. Now, yearly basis, let us do the same. Which basis? Yearly basis. See the question and tell. Year 1, how much is the profit? Of an investment of how much? 3 lakh. Tell me. 80,000 divided by 3 lakh. 26.67%. Okay. 80,000 divided by 2,30,000. 7. Next, 80,000 divided by 1,60,000. 50%. This is on an annual basis if you do. What basis? We want average, na? Original, the formula, we have to take average or not? Tell the average. 26.67 plus 34.78 plus 50 divided by 3. That's how this one came. Hey, understood? On what basis? And this you need not do in exam, only for understanding. Either you should do this one or you should do average investment. Now you will tell average investment answer. Average investment equal to formula. Opening investment plus closing investment minus salvage value divided by 2. Divided by 2. Okay. Plus salvage value. Shall we first answer my question? Listen. How much we invested? Answer. 3 lakh. It became how much? 2 lakh 30. Next it became 2 lakh 30. Again it became 1 lakh 60. We started with 1 lakh 60. It became 90,000. Correct? Now you tell me, I will listen. Opening is how much? Very good. Next. Closing is how much? Answer. I'm talking entire closing, not yearly basis closing. What is the total closing? 90,000. That itself is the salvage value. Listening? Again, don't write closing plus salvage value again. A closing value, nothing will be there. For that only we are paying the salvage value. Listening or not? Minus salvage value, how much? 90,000 divided by 2. 1 lakh 5,000 plus the salvage value, how much? Tell the total value 1 lakh. What is this 1 lakh 95,000? What is this 1 lakh 95,000? That's it. Okay. 1 lakh 95,000 is the average investment. Understood, everyone? Now tell me, what is the average return that we are getting? 80,000 on an average investment of 1 lakh 95. Tell the final answer. 41.03. That's the answer. If you understand, we'll go to the next one. Tell all the 3 formula or 2 formula. Error, what is the true formula? Do it here. Number 1. Write down in the notes. Original investment. Original investment. Average profit after tax divided by original investment into 100. What is the average profit after tax? 80,000 divided by 3 lakhs into 100. .67%. Second one. Average basis. Average profit after tax by average investment into 100. Average profit after tax 80,000. Sidewards write down the formula. Average investment equal to opening investment. Closing value will be taken as 0 always. That's why they will not put it in the formula. Directly minus salvage value divided by 2. A closing we are getting salvage. Listening. Salvage, 1 second. Opening investment is a outflow na inflow na? Investment is a inflow na outflow na? Answer. Outflow. 3 years completed. We are selling the asset. We are selling the asset. Inflow na outflow na? That's why we are reducing there. Understood? That's why we are reducing it. Divided by 2. Plus SP. Tell me. Opening investment 3 lakh. Closing, salvage value closing. Divided by 2 plus 90,000. Tell the answer. 1 lakh into 100. Tell the answer. 41.03. I think every one of you understood how to do. Next, come to this one. Now, which model we completed? Which concept we completed? ARR. Next. Before going into any other thing, I want you to see this. Example or illustration 1. See, entire capital budgeting chapter, you should always consider cash flows, not the profits, except accounting rate of return formula. That's why numerator what we have taken, profits we have taken, not the cash flows. In all other concepts in capital budgeting except ARR, we will consider cash flows. We consider profit is a combination of cash and non-cash items, because the depreciation also will be there. What also will be there? Depreciation is a cash item, non-cash. But profit calculation, depreciation is also reduced or not? But it should not be reduced. But we reduced it. Listening. Therefore, what we need to do? Add back. What we need to do? Add back. See the question now. ABC Limited is evaluating purchase of a new machinery with a depreciable base of 1 lakh. Value 1 lakh. Expected life how many years? 4 years. Change in the EBIT and depreciation. Earnings before taxes and depreciation is 45,000, 30,000, 25,000 and 35,000. Assume straight line depreciation, SLM and 20% tax rate. You are required to compute the relevant cash flows. Tell me now. How many years data they have given? How many years, sir? 4 years. Everybody answer to this. Year 1, how much is the EBIT? Earnings before depreciation, interest and tax, how much? Tell me. Earnings before depreciation, interest and tax means first what we need to reduce? Depreciation we have to reduce. What we need to reduce? Depreciation. Tell me. What is the cost of the asset? Life. Salvage or no salvage? No salvage. Therefore salvage value will be 0. 1 lakh divided by 4. 25,000. Answer. First year. Take calculator. Everything we can't put on paper and they waste the time. Faster. Tell me. First year what is the earnings before depreciation and tax? 45,000 minus what? Depreciation. 25,000. How much you got? Interest anyway not given. Okay. Tax how much? Minus 20%. 16,000. What is that? Profit after tax. Plus depreciation again. How much? 41,000. Year 1, year 2, year 3 and year 4. How much I got? Next year. Like that. Fast. 30,000 minus 25,000 minus 20% plus 25,000. 29,000. Next. 25,000 minus 25,000 plus 25,000 again. How much? 25,000. Last. 35,000 minus 25,000 minus 20% plus 25,000. 33. What is this? 41, 29, 25, 33. 41, 29, 25, 33. Answer over. Shall I go to the next concept? What we completed now? అసలు దాని దీనికి ఏం సంబంధం లేదు. That is average rate of return concept over. This is only just understanding the cash flows concept. Tell me, in capital budgeting, all concepts what we use, but except in one model, ARR calculation, we don't use cash flows. We use the profit. Reason is name itself is saying na accounting rate of return. Therefore, we take accounting profits, not the financial cash flows. Understood the point clearly? Done. So what we completed now? Cash flows and accounting rate of return. Next one. Next concept is payback period. What period here? I will tell directly in the notes itself we can do. Listen first. Payback period is a concept where we will calculate the time taken. We will calculate the time taken to get back our investment or investment that is made. Example. Company invested 5 lakh rupees in an asset. First year my cash flow 2 lakh. Second year my cash flow 2 lakh. Third year my cash flow is 1 lakh. Fourth year my cash flow is 2 lakh. Fifth year my cash flow is 2 lakh. 2, 2, 1, 2, 2. Now tell me, how much I invested? Loudly. 5 lakh. First year how much I got? Until still 3 lakhs is still recoverable. Next year how much I got? So still 1 lakh is recoverable. Third year how much I got? That means my principal investment came back to me in how many years? This is called as a payback. There is another concept called as a discounted payback. Here I said very clearly, first year how much I got? Second year. Therefore, first year 2 lakh and second year 2 lakh will not have same value. We will discount them in total. That's called as a discounted payback. Shall we do the questions? See the screen. Payback period is of 2 types. Annuity cash flows, multiple uneven cash flows. Tell me, what's the first one? Sir, what is annuity cash flow? Every year, same cash flow will come. That's called as what cash flow? Annuity. Multiple uneven cash flows means what? 1 year 1 lakh, next year 2 lakh, next year 1 lakh, next year 2 lakh, like that randomly cash flows will come. Listening, you use your common sense and tell. I want amount, percentage, time period. Loudly. I will ask one question, you tell me. I invested 10 lakh. I will get every year 2 lakh rupees. In how many years my 10 lakh will come back? Loudly. How you calculated? How you calculated? Common sense, I said, if any. How you calculated? I invested 10 lakh. Every year you will get 2 lakh. How many years my 10 lakh will recover? How you got 5? What 10? 10 lakhs divided by 2 lakhs. What is the 10 lakh? What is the 10 lakh? Investment. What is the 2 lakh? Cash flow per annum. Cash flow, that's the answer. Over. Payback period, annuity cash flows formula will be total investment divided by annual cash flow. Total investment divided by, that's it. Read. You want to read. Total initial investment divided by annual profit, annual cash flows. Understood the point clearly? Annual cash flow. Understood the formula? Sir, discounted payback period below, instead of taking the annual cash flow, you will take the PVAF. What is PVAF? Present value annuity cash flows we will take. Which cash flow? Annuity cash flow. Do you remember cost of capital chapter? Column number 1. Year. As the sources that will be weighted average cost of capital. Okay, year. Second, cash flow. Third column, PV. Fourth column, okay. Year 1, what you will write? 1 to 5. 1 to 5. 10 rupees. What will calculate? Annuity. That one you have to put in denominator. Listening everyone? If they ask which payback? Discounted payback. So, write down. Keep the heading. Payback period. Normal. Discounted. Normal. Discounted. Normal payback. 2 branches again. Annuity cash flow. Multiple uneven cash flow. Annuity cash flow. Multiple uneven cash flow. Okay, let us begin. So normal and discounted. Annuity cash flow means investment divided by cash flow per annum. Cumulative cash flow. Investment divided by present value of annuity cash flows. Discounted cumulative cash flows. Discounted cumulative cash flows. Discounted cumulative cash flows. Up to here, everyone had the clarity? Tell me, what are the 2 types of payback period? Normal payback period, discounted payback period. First one, normal payback period. Second one, discounted payback period. Normal payback period, annuity cash flows ki direct investment divided by cash flow per annum. Next, multiple, total them and calculate. Next, annuity cash flow means investment divided by present value of annuity cash flows. Okay, rather than seeing as a formula, we will do problems now on all the 4 models. Then you will get full clarity, obviously. Okay, shall we start? No delay, let us begin. Example 4. Example 4. Example 4. Read the question. Suppose a project costs how much? 20 lakh. Yields annually a profit of 3 lakh after depreciation of 12.5% SLM. Okay, but before tax is 50%. Understood up to here? First you tell me, I will write. How much is the profit? Read the question. How much is the profit? 3 lakhs. Profit after depreciation but before tax. Before depreciation tax, after depreciation, before tax. After depreciation, but before taxation. But before taxation, this is the profit. How much profit? 3 lakh. Use common sense and tell. How much is the investment? How much is the investment? How much is the depreciation every year? 12.5%. Tell me. 20 lakh into 12.5. 2 lakh? 50,000. Correct or not? Okay, now tell me. What is the life of the asset? Given or not given? Given, yeah. SLM, the value of the asset will become 0. Means 8 years. How many years? 2,50,000 into 8. That means 20 lakhs will get covered in 8 years. Hey, listening? Tell me, what is the total life? 8 years. Total life is how many years? Start again. What is the profit? What is the profit? 3 lakhs. Are the profit? Cash loan? After depreciation or before depreciation? And already in this depreciation is deducted. 2,50,000 deduction after this answer came. Clear? So, from that 3 lakh, what we need to reduce? Tax. Calculate. How much? 1,50,000. To this, what we need to add back? Depreciation. Add back 2,50,000. How much? That's how this 4 lakh came. Understood? Tell me now. Every year, this company make how much cash flow per annum? Just now you calculated. How much? How much is the investment? 20 lakh divided by 4 lakh. Tell the life. 5 years is the life of payback. Tell me, what is the total life? Within how many years I will get back my principal? That's the answer. I think this even don't require any calculation. Everyone understood? Completed. Next. Example 5. Now you people will tell. See there. See the screen. You need not even see your notes. See there. Just how to complete capital budgeting in 1.5 hours. This is how you can complete. Each and every question you will do, but let's not waste time. Okay. Then every model you will cover in the capital budgeting. After the practice. See there. See there. See there. First, this particular project is requiring an initial outflow of how much? 2 lakh. Annually, how much they generate? 80, 60, 60, 20. Same, changing. Then you cannot use annuity. When annuity can be used? When all are same cash flows. Okay? Tell me. I will write here. Cumulative cash flow. First year, how much I will receive? My principal is recovered or not yet? Not yet. Still, how much is there? 1,20,000 is there. In that, how much is recovered next year? And totally, how much is recovered? 1,40,000. How I got 1,40,000? 80,000 plus 60,000. And by the end of second year, in my 2 lakh, I recovered back. Next again 60. Answer. 2 lakhs. Correct or not? That's it. You need not do because my capital has been recovered in how many years, sir? That is the answer. Everybody understood? That's it. Okay. Next. There is another concept called as a payback reciprocal. Chapali, what is this? Payback, reverse of payback. Tell me what is the formula for payback? Investment divided by cash flow. The cash flow divided by investment is payback. Payback reciprocal we call as a return on investment. Return divided by investment. Listening? Payback reciprocal, another name is a return on investment. Return on is also called as what? Payback period. Understood? Payback reciprocal. I'm very sorry. Payback reciprocal. See the question. Example 6. Project requires initial investment of how much? Cash flow is useful life with how many years? Tell me the payback reciprocal. What is the formula? Cash flow. How much cash flow? 4,000. Divided by how much? 20,000. Tell. That's it. Answer over. Understood? That's it. With this, what models we completed? Example problems also we are not leaving. Tell me what we completed now. 3 models we completed. ARR, payback period, discounted payback. Discounted payback is nothing that, see, what are these? If you apply PV factor and calculate PVCF, that becomes what cash flow? Discounted cash flow. Using that, if you calculate, that will be called as what? Discounted payback. Example, they don't ask discounted payback. They are mostly asking only general payback only. Listening? Now tell me, which concept will start after all this? Answer. I want you to do one thing. Can you calculate ARR for this on calculator? I want you to do ARR for this calculation. What is the formula for ARR? Don't do original. Always try to do average investment basis only. Tell me the formula. Average profit after tax divided by average investment. First tell me what is average investment formula. Opening investment minus plus closing leave of 0 minus salvage. How much is the salvage? 80,000 divided by 2 plus 80,000. 5 lakh. What is this 5 lakh 40? Average return, average investment. Average investment. How much? 5 lakh 40. Numerator what should come? Average profit should come. Total amount, take the average. 4 lakh 60,000 divided by 5. 92 into 100. 17.04%. So they got some other answer. This is total investment basis here. Listening, but we have done on what basis? Average. So how much is the final answer? 17.04. Everyone understood the point clearly? Next concept is, what concept? NPV. Now I will ask you to do one thing. Tell me. NPV is nothing but calculating discounted cash inflows, reduce discounted cash outflows, positive accept the project, negative don't accept the project. Listening, zero indifferent. If you want you can, or else you need not. Listening, you can ask anyone who has taken the normal FM classes. If you know, NPV concept will take 3 hours to explain because a lot of science is involved in NPV calculation. But in this, our motive is not to understand the logic, everything. Example, if question comes, you should be able to answer. Listening, keeping all things aside. On that basis, you tell me this. Tell me, year 1, year 2, year 3. Compute the NPV of a project with the net investment of how much? Tell me, how much we are investing? 1 lakh. How much cash flows we will get for the first year? Second year? Third year? What is the PV factor? Tell me all the columns. Year, cash flow, PV at the rate of 10%, PVCF. What we get? Discounted cash inflow. Discounted cash. From that, what you need to reduce? Discounted cash outflow. How much is outflow? 1 lakh. Balance will be called as what? NPV. If that is positive, accept the project. Negative, reject the project. Understood? Will you do? Start doing. 2 minutes time. Completed? How much is the answer? 27? Everyone got the same answer? Everyone? 27, 340. That's it. 27, 340. Next. See this question. See this question. ABC Limited is a small company. Some data given. Let us focus on main thing. Tell me, how much is investment? 5 lakh. Capital budget is 5 lakh. Cost of capital? 12%. He is asking us to compute what? If you can do this question, it is like doing NPV 4 times. Because how many projects are there? Loudly. Can you do it? How to do, I will tell. See, don't write 4 projects and waste your time. Your schedule should be like this. What is this? No. When cash flow is involved, you should write like this. Cash flow A, cash flow B. Next, cash flow B. Next one, cash flow C. Next, cash flow D. PV at the rate of 12%. One time only it should come. Listening, Next one, PVC of A, B, C, D. Finally, whatever the answers you get here, we call it as discounted cash inflow. Disky minus disco. What is the disco? Discounted cash outflows. Reduce that. Finally, you will get the answer of NPV. 5 minutes time. Will you fastly do and tell the answer? Right on. Do it. Practice in the class itself. Complete it. Don't see the answers. Try it in the class. Complete it. Completed project A, B at least. A and B, tell me the final answers. A is 19,750 negative. Positive, 25, 630, 5. Last. All of you, have you got the same answers or not? Completed? Everyone, have you completed? No. So now we have completed questions on, what questions we completed? NPV. Which one? NPV completed. Okay. Next. Next one is profitability index. Everyone, tell me what is the next topic? Profitability index. Same ditto NPV. What is the NPV formula? Discounted inflows minus discounted outflows. Discounted inflows divided by discounted outflows. Profitability index. Clear? Okay. Now tell me. Suppose we have 3 projects. Discounted outflow 5,50,000, 75, 1 crore 20,000. And discounted inflows. Calculate the desirability factor. Desirability factor is also called as profitability index. Okay. Take calculator. Tell the formula. Discounted inflows divided by discounted outflows. Okay, do that. 6,50,000 divided by 5,50,000. 1.18. Next. 95,000 divided by 75,000. 27. Okay, next. 1 crore 30 lakh divided by 1 crore 20 lakh. 1.00 1.01. Sorry, okay, 1.001. And so what are the 3 answers? 1.18, 1.27 and 1. Almost 1. Correct? Simple. NPV basis la how to accept a project. NPV positive, accept. NPV negative, do not accept. Like that. Profitability index more than 1, accept. Equal to 1, your wish. Less than 1, reject the project. Listening? That's the question here. Everyone, whenever profitability index is less than 1, it is a negative NPV case. What I said? Whenever profitability index is less than 1, it is a negative NPV case. All negative NPV cases will come into profitability index less than 1. Understood? Done. Next one. What is the next concept? IRR. Tell me what are all the techniques we completed till now? ARR. Next one, payback period, discounted payback period, NPV, profitability index. What is the next concept? IRR. What is the full form of IRR? Internal rate of return. This concept you will do just like that because it is nothing but calculating YTM. You remember YTM? Trial and error basis we will take 2 rates. 2 answers we will get. Right answer will be between both of those rates. Same concept, IRR. Okay, let us do. IRR, 2 concepts will be there. Annuity cash flows, multiple uneven cash flows, IRR. Okay, see here. Illustration 6. Directly you can do there itself. See there. Tell me. A Limited is evaluating a project involving a outflow of how much? 1 lakh. Resulting in a cash inflow of how much? 2,50,000 for how many years? 6 years. Salvage value is 0. Determine what of the project? IRR of the project. You will tell me, I will listen. Start. How much is the investment that we made? 10 lakhs. How much is the inflow that we get? 2,50,000. For how many years? 6 years. How much a return project has given is a question now. Okay? I will ask a question. Tell me. Cash inflow is 2,50,000 for all the 6 years, or each year it will be 2,50,000 for 6 years time. All 6 put together 2,50,000. Each year 2,50,000 for 6 years. Everyone. Each year 2,50,000 for how many years? Loudly. Like that we will get the values. Okay? Now you will tell, I will ask. Multiple uneven cash flow na, annuity cash flow na. Everyone? See here. Here, cash flow, PV at the rate of some X percentage. We don't know. IRR ki, this only we will calculate. PV, CF. Here, 1 to 6. How much I will get? 2,50,000. 2,50,000. Listen carefully. IRR is a place where discounted inflows will be exactly equal to discounted outflow, or NPV is exactly 0. Understood the point? Repeat again. What is IRR? IRR is a rate. See there, I am rounding. See again. Start. What is IRR? IRR is a rate at which discounted inflows will be exactly equals to discounted outflows. Or in other way, how can you tell? NPV is exactly 0 at that position. Clear? Okay. Now listen carefully. Shall we? What we get here is called as what? 2,50,000 is what? Inflow na, outflow na? Answer. Here we need to take 1 year discounting factor, annuity factor. For how many years? 6 years. Multiply with that, whatever you get, I call it as what? Discounted cash inflow. This will be equal to how much? Discounted cash outflow. Already we know how much is the discounted cash outflow. How much? 10 lakhs. So, this key also should be equal to how much? 10 lakhs. So, now you will tell 2,50,000 into present value of annuity factor, some amount should be equal to how much? 10 lakhs. So, what is the present value annuity factor? 10 lakh divided by 2,50,000. How much it will be? 4. Now, I will ask a question. Do it. Tell me. Take calculator. Randomly you tell 10% 6 years annuity factor. 10% 6 years annuity factor. Everyone let them do. Do you understand how to do? How much percent? How many years you have taken? 6 years. At what rate? The annuity factors also you cannot calculate. How many years I asked you to calculate? 6 years. At what rate? 10%. Take calculator. 1 divided by 1.10 equal to m plus for 6 years. How many times I should tell basics? Tell me. 10%. What is the answer? You got 4.35? 36. Okay? 4.36. We want 4.36 or 4. Loudly. That should reduce or increase. 4.363 should become 4. Value to reduce means PV factor should increase. Take 12% for 6 years and tell. 1 divided by 1.12 for 6 years annuity. 4.111. Now 11. Okay? 4.11. Next. This is for how much percent? Tell me. 13% answer. 1 divided by 1.13 equal to m plus 6 times MRC. 3 point? Almost 4. Correct? And the answer is how much? 13%. So IRR is how much percent? 12.978, also called as a 13%. Like this you can do in the exam. Without doing any nonsense, we can directly tell. Clear everyone? So tell me, what is IRR? Not full form. Concept you tell. IRR is a rate at which discounted cash inflows will exactly equal to discounted cash outflows. Now the problem, whatever we have done here in the class on this is annuity cash flow na multiple uneven cash flow na. Annuity cash flow, same we can also do for multiple uneven cash flow, but then you cannot do like this. You should do trial and error. Randomly we will take some rates and we'll start doing. Shall we do that also? Those are more popular in exam. Take this question. Question number 7. Now, what you people will do is, see the screen once, calculate the internal rate of return. Investment is how much? 1,36,000. How many inflows are there? 5 inflows. At what rate we need to discount? We don't know. Randomly we should do the answer, because no one will know, including me, how much will be the final answer. First, what we will do is we will put 10%. 10, no, 20 or some amount. Let us take 10. 10% when you calculate, it should be equal to 1,36. It should be equal to, generally it will not equal. Either it will be higher than 1,36 or lower than 1,36. Say for example, it came to 1,48,000. What you will do? PV factor should be increased or decreased? Answer. Increase such that value will reduce. Or it came to 1,20,000. What you will do? Decrease the PV factor such that answer will come to near to 1,36,000. Shall we do? You will do. Start. 2 minutes time. 10% you do first. Do one thing. Space congestedly you write down, because if that doesn't give 1,36,000 na, immediately on the right side you need to fill the gap again. Here cash flow, PV at the rate of 10%, PVCF. Start doing the answer. Anyone did the answer? How much you got? స్లోగా చేస్తే పుణ్యకాలం పూర్తయిపోద్ది ఎగ్జామ్లో. Fast. Exam if there is a question on IRR, you should spend only 4 minutes max, because question will come only for 4 to 5 marks. Any 1 minute extra you are spending, you are killing the time. 10% how much is the answer you got? 136. How much you got? 1,38,280. Have you got the same answer? We want 138,280. We want 1,36,000. 1,36,000. So what we need to do to get a lesser value? Increase the rate. Take 12%. No. Adhe cheppindi. After this only you take PV, then PVCF. Then again you need not write the data. Have you got the answer? Have you got the answer? 138,280. Everyone tell me. Okay, let them also do. How much is the answer? It's 10.704. How much is the outflow amount you got in the first case? 138, 280. Next case? Something near to 10-15 rupees, no problem. But we need 1,36,000. You know the format rate. PV at the rate, whatever the value we receive, desirable value 1,36,000, difference calculation, change. Have you done? Everyone, how much is the answer you got? 10.704. Huh? Let me show you the answer. Perfect. 10.704. So if you follow my model, whatever it says, I told you at the beginning, never you will commit mistakes. See, without using that nonsense formula only we can do. As much as possible, avoid using formula, because if you forget, your answer also will go wrong. But if you go by concept, never you will do mistakes. See here. Next one. This also you will only do. Read the question. A company proposes to install machine involving a capital cost of 3,60,000. Life is 5 years, salvage value nil. Machine will produce net operating income after depreciation. How much? 68,000 per annum. The company's tax rate is how much? 45%. Rates also they have given. They just ask you to calculate the internal rate of return. Answer to my question first. Later you can do. What is outflow? What is outflow? 3,60,000. What is the inflow? 68,000. Wrong. That is profit. We have to calculate inflow. That's the only new point in this case. Okay. First listen. What is the 68,000? Income after depreciation. Income after profit after depreciation. How much? Can we calculate depreciation? Can we calculate depreciation? 3,60,000 divided by 5. 75? 72,000. What is that 72,000? Non-cash outflow. Non-cash. After deducting that 72,000, we got that 68. Calculator. 68,000 minus 45% plus 72,000. How much? 1 lakh? What is 1,09,400? Cash inflow. What is it? Cash inflow per annum. Cash inflow per annum. Multiple uneven cash flow na annuity cash flow na. Annuity cash flow. Clear? Then take calculator. 1,09,400 into some X should be equal to 3,60,000. Correct or not? Do it. 3,60,000 divided by 1,09,400. 3.229. Let us take 3.29. 3.29 is between what and what here? 15% and 16%. Will you do it or not? Tell me. PV at the rate of dash. 15. How much? 3.35. 16. 3.27. For 1% change, how much PV value changed? For 1% change, how much PV value changed? 0.08. Desirable value, what we want? 3 point something, you said 3.29. Correct? Huh? We can calculate IRR in that way. Start calculating. Okay. How much is answer? Have you done? How much is answer? Now did you understand how to do? And the over IRR. Okay. Next. Have you got this answer? See there. See how much a circus institute has done. Without doing all this, you can do it in a most simple way possible. Next. Let us take this question now. See the question. Illustration 9. Illustration 9. Investment is how much? 1,36,000. Yields following inflows. Profit before depreciation but after tax. Inflows they have given. Determine the modified IRR. Determine the modified IRR. At what percent cost of capital? Answer. 8% cost of capital. Tell me, what do you know about modified IRR? Some knowledge you should have, na? What is modified IRR? Modified NPV, you know? Modified IRR. గుర్తురావట్లేదా? తెచ్చుకో. ఎక్కడుంది? వస్తుందా? దారిలో ఉంది. ఎగ్జామ్ టైంకి వచ్చేస్తా? వచ్చేస్తుంది ఇమీడియట్గా. సో tell me, what is the concept name? Modified IRR. Listen, notes I will first show you why it is practically very difficult for me to explain at this moment. I will just give you an example for you to understand. See here. Read that once. Heading. NPV and IRR conflict. Also called as the disparities. There are two kinds of disparity. Life disparity and volume disparity. Two types of disparities will be there. This is one question, concept question taken from CA final. For explanation at CA interlevel, I took one question from final. This is the final question. From here we started. See the length of the answer. First we do this. Next we did this. Project X, Project Y. Final answers. Conclusion. Stage 2 analysis. Conclusion 2. Stage 3 analysis. Stage 4 analysis. Stage 5 analysis. Stage 6 analysis. Here the answer is over. Means this concept 8 hours I used to spend to explain us what is this concept of modified NPV, modified IRR. One should first understand concept, na? But exam time we don't have that much time. If student already know, for example, same thing, same class, if I conduct in Chennai or somewhere else where I've taken, student will immediately tell because they are my direct class students. So already we might have undergone all this torture. But or not, already they might have underwent all this torture treatment in the class. So just like that they will understand. But the problem that comes here is when you don't know the knowledge about what is modified IRR, modified NPV, because a lot of concepts are involved in that, it becomes difficult for explain. But what I will do for you is, I will tell how to write the answer in exam if a question comes. At the end, anyone want marks? We should first qualify. We will see in final. So, but for doing that, we should first complete this now. From that point of view, if you ask me, I will tell one simple trick for you how to understand this modified IRR, modified NPV. Listen. Modified IRR whenever comes in question. Remember one thing blindly. My voice you should remember on exam date. If question comes on modified IRR, you should prepare reinvestment table. Which table? Reinvestment table. Again, which table? Higedi batti. By heart it first. Remember. Whenever question comes on modified IRR, I should first prepare reinvestment table. Why? Don't ask. You should prepare. That's it. We don't have time now to discuss about why it will happen that way. Clear? I will now tell you, 1 minute you will give answer for this question. Really, sir? Very really. Shall we try? Give a try now. I will ask question. Fatafat, give the answers. See there. Simple questions I will ask. Tell me. Year 1, how much is a cash inflow? Loudly. This 30,000 when you will receive today na after 1 year? You will put it in dustbin or invest. reinvest. What you should do? Reinvest for 2, 3, 4, 5 years. And how many years? 4 years you will, hey, not 5. This cash flow you got today, na, after 1 year. Life of project, you received 30,000 after 1 year. Means still how much life is there? 4 years. 40,000 when you will receive? After 2 years. So reinvest this 20,000 for 3 years. Listening? Now you will tell the answer for me. I will write here itself. You will tell. Balance years. Tell me. 4, 3, 2, 1, 0. What is the rate of interest? 8%. Reinvestment. 30,000 I will reinvest at 1.08% for how many years? 4 years. Listening. Next. 40,000 I will reinvest 1.08 for 3 years. Next. 60,000 I will reinvest at 1.08 for 2 years. Next. 30,000 I will reinvest at 1.08 for 1 year. And 20,000 I will reinvest at 1.08 for 0 years. Clear? Now you will tell, I will just listen. 1.08 in power 4 అంటే into is equal to 3 times. మీకు క్యాలిక్యులేటర్ నేర్పించాల్సిన రోజు వస్తుందని నేను అనుకోవట్లా. 40,000 815. Okay, next. If you feel difficult, do one thing. 40,000 into 1.08 into 1.08 into 1.08. ఇంతకన్నా నేనేం చెప్పలేను. Tell. 50,000 388. 69,000 32,000 20,000 total. 2 lakh 30 na 30 13 587. 2,13,587. 2,13,587. Up to here everyone understood clearly what we have done? Reinvestment table. Why? అడక్కు అసలు అయిపోయిందంటే అది అలా చేయాలి అంతే, లేకపోతే అయిపోతాం. సో 2,13,587. 2,13,587 is called as a maturity value. What value? Maturity value. When today, after 5 years. After 5 years, this is a maturity value. Correct? Now listen carefully. Year cash flow. Tell me. 0 year until today, how much we invested? 1,36,000. 5 years after, how much maturity value you got if you reinvested? 213,587. Very good. I will ask one question. Tell me. 136 is a present value or future value? Very good. 1 second. Now tell me what value? 213,587 is lovely. Very good. Now you should tell me one point. FV equal to PV into 1 plus R whole power n. There is a formula. Correct? This formula also has a derivation. But this is not the time to do all those circus. So FV equal to PV into 1 plus R whole power n. Okay. What is the FV? 213,587 equal to what is the present value? 1,36,000 into 1 plus R whole power. How many years? 1 plus R whole power 5 equal to 213,587 divided by 1,36,000. 4 digits you tell. 4 decimals. 705. 1 plus R equal to 5th root of 1.5705. Do you know how to do this? Take calculator. 1 babu sarigga cheyabothe potaru mottham potaru. Do it properly. Take calculator. 1.5705. First type it. చెప్పింది దానికి ఒక టెక్స్ట్ అవద్దు, తక్కువ అవద్దు, చెప్పింది చేయండి చాలు. టేక్ 1.5705. స్క్వేర్ రూట్ 15 టైమ్స్ ఈజ్ ఈక్వల్ టు లాంటి కొట్టి ఓవర్ యాక్షన్ చేయకండి. స్క్వేర్ రూట్ 15 టైమ్స్ మైనస్ 1 డివైడెడ్ బై 5. వి వాంట్ 5th రూట్ డివైడెడ్ బై 5 ప్లస్ 1. ఇప్పుడు జాగ్రత్త వినండి, విన్న తర్వాత ఇచ్చేయండి. ఈజ్ ఈక్వల్ టు ఇంటూ కాదు, ఇంటూ ఈజ్ ఈక్వల్ టు 15 టైమ్స్. 1 plus r equal to how much answer you got? 09? And r equal to 0.0945. R equal to how much percent? This is modified IRR. Perfect. 9. They have given round number. Listening everyone. They have given what number? Round number they have given. Okay. Do in calculator one more time. 1.5705. What we need to do next? Square root 15 times. This is the procedure I am writing. First square root 15 times. Minus 1 divided by decide root plus 1 into is equal to 15 times. He has taken only 2 digits. 1.09 he has taken and stopped. So therefore the answer for the institute middle is how much? 9. What is this we calculated? IRR or modified IRR? The IRR is something 8%, but modified IRR is 9%. Listening, but to understand all these things, it requires 2 sessions of 3.5 to 4 hours. 8 hours we need to spend, but full maja will come here. FM normal regularly, if you do the problems at very level, you will understand what they wanted to convey. So anyway, at the end we wanted to pass. Tell me, understood the procedure how to do or not? What we computed now? Modified? Over. Next. Okay, see here. 1 minute. Listen. See question number, illustration number 10. Illustration 10. Here 0, 1, 2, 3. Project A, project B. Assuming cost of capital is 10, identify which project should be accepted as per NPV and as per IRR. How to do NPV? How to do NPV for these projects AB? Already they have given cost of capital or not. What is the format? Year, cash flow, PV at the rate of 10%, PVCF. We'll calculate NPV. Correct? IRR, we should take randomly 2 numbers we need to take. How many? 2. 2 numbers we can randomly take. But I can tell you one thing for understanding sake. Total 50,000, 60,000 and 40,000. 1 lakh 50. How much? 1 lakh 50,000. Correct? Now listen carefully. 1,50,000 is the total. This is the cash flow, not discounted cash flow. Cash flow, not discounted cash flow. We didn't discount it. Correct or not? IRR should be how much randomly, how much number I should take. Question will arise or not? I am getting a return of 1,50,000 on an investment of how much? 1 lakh. Correct or not? I am getting a return of 1,50,000 on an investment of how much? 1 lakh. How much it will become bigger? 1.5 times. How much times? So 10% is the cost of capital. You take 1.5 times the 10%. How much it should be? 15. Approximately 15th we can start the answer. Listening, see here. NPV, I think you can understand how they calculated. Okay? IRR, that's why you see they have taken how much percent here? 20%. Like this they started doing. Okay? First what we need to do is we should randomly take 2 numbers. That number I don't know, you don't know, no one will know. We have to take randomly 2 percentages and start doing the answer. NPV calculation everyone can do or not. Next, for one question like this, let's do NPV and IRR together. Start. Keep the heading. Calculation of NPV of project A and B. Step 1. Calculation of NPV of project A and B. Okay, how to do? Here, don't write 2 times, directly write there itself. Here, cash flow A, cash flow B. PV at the rate of 10%. PVCF A, PVCF B. Such that everything you can complete in 1 page. What is NPV for project A? 25,050. Very good. Next. Okay. Everyone got the same answer? Okay. Next. Next one. We have done NPV. Now we need to do NPV. We have done. Now we need to do IRR. Tell me how to do IRR. You every project you should do separately with the two rates. Correct or not? Two different rates you need to take, and then you need to do. Okay, va? You do one thing. Take between 15 and 20, 15 and 25. 15 and 25. Take between 15 and 20. You do one thing. Project A, you take between 15 and 25. Okay, na? Total these three. 4 lakh 30,000 divided by 3 lakh 1.43. Okay, do one thing. This also you take between 20 and 25. Or if you wanted to do randomly only, we have to do, because no one will know what is the right answer. Okay, listening? First you take one rate. If it is very very far, you have to increase or decrease the rate accordingly. See here, which question that is? Illustration number 10. See, whatever the rate I have taken, I will tell you, take those rates and do. 10th illustration I have taken. See here, 22 and 25 for project A, 20 and 25 for project B. See, I am writing here 22 to 25 for project A, 20 to 25 for project B. Exam, everyone has to try on their own. Start doing. 5 minutes time. Once you do, NPV IRR also will be completed. Are you understanding what I am asking you to do, everyone? Project A take 2 rates, 22, 25. Project B take 2 rates, 20, 25. So everyone see here once. See here. Answers should be 24.26 and 21.48. Have you got that? So see here. Even if anyone could not do project A, answer is completed. Project B, more time is required. Please do at home and complete it. Nothing great. Same procedure. Listening? Every question in the study material. See, from here everything is same. Repeated problems all are. Listening? See, next question also same. But we are now coming into a new area called as unequal lives. Which life? Unequal life. Very easy area. Listen carefully once. That's it. If you listen, you will complete. See, one project is having 3 years life. Another project is having 4 years life. Comparison of a 3 years life project with a 4 years life project is a nonsense, because obviously 4-year project will have more cash flows. Correct or not? They understanding? There are two projects. One project is having 6 years life. Another project is having 3 years life. How can you compare a 6 years life project with a 3 years life project? Obviously 6 years will win. There should be a fair comparison. Correct or not? Dead easy concept. Life disparity. Do you know what? Listen, I will tell you. Step 1, NPV calculation. Step 1, calculate NPV. You will get NPV, yeah? Answer. Now tell me. 3 years project, 6 years project is there. Can you compare directly? No. Whose NPV will be more? 6 years project NPV will be more. So that's not a fair comparison. Let's do one thing then. NPV will calculate. 3 years project we will divide by life. 6 years project we will divide it by life. You will get per annum on both sides. Compare per annum. That's why it's called as equated annuity benefit. Understood the point clearly? 1 minute you will complete. I have that confidence. But you need to do one thing before that. See this question. See this question. Tell me. Project A, what is a life? Project A, what is a life? 1 year. Project B, what is a life? 3 years. Can you compare a 3-year project with a 1-year project? No. Understood the point clearly? Okay. Before even doing this, I will give you one small illustration. You can understand it. They have done just NPV and IRR. Okay, I will show you this question. Yes, you will understand from this. See this illustration. See this illustration once. Where is this? See here. Now, you will answer, I will ask question. Just on calculator you can tell. Illustration 14. See the screen. There are how many projects? 2 projects. Project number A, project B. How many projects are there? 2 projects. There is a name. Project A, what is a life? Project B, exactly what I said now. Can you compare both directly? You cannot, because project A will win. So it's not a fair comparison. Clear? It's not a fair comparison. What could be a fair comparison? Calculate NPV for them. Calculate NPV also for them. Divided by, you cannot divide by life. I will tell you why. Numerator, what you are taking? NPV. NPV is a discounted value or non-discounted value. Life also should be discounted. Therefore, take PVAF, not life. Take what? PVAF. Tell me. See the question and tell. What is the discounting factor there? Question the discounting factor. How many years is a life? 6 years. Discounting PVAF calculate. PVAF. 4.111. Correct? 4. Question lo they have given NPV. Tell me. 6,49,094 divided by 4.111. Write down somewhere else or write down there itself. 1,57,892. This is the EAB. EAB of which project? Project A. Next, same calculate also for B. 12% for 3 years. 5,15,488 divided by 2.40. 2 lakh. అర్థం కావట్లేదు మీరు చెప్పేది. 2,14,787 or 600, 700 or something. Okay. Now turn the answers. Which project is better now? Project A or project B? See here. Answer is over. అంతే అయిపోయింది. Over. Yeah, chapter. These are all the concepts in your syllabus. The only reason why you did not understand capital budgeting means you don't know these concepts. That's it. First, if you know the syllabus, half problem done. If you know the concept, no one will stop you. So this is all concepts put together. This is capital budgeting. Did you understand how that answer came? 4.111 we have taken. Here we have taken 2.40. That means slight change in answers will come, but that's no problem in exam. Understood overall idea or not? That's why it's called as equivalent annualized criterion, also called as equated annuity benefit, equated annuity cost. Clear everyone? This is the whole capital budgeting as a concept. On this basis, you have to do the practical questions practice. Okay? Next class, what I said I will do? First, I will be doing these practical questions. Listening, first we will complete all practical problems on capital budgeting. Once we're done, then we will be going into the last area of our syllabus. What is it? In working capital management also, there is only two concepts which are important for exam. One is working capital estimate. Second one is the debtors management. Which one? Debtors management, 4 questions are there. Normal question, discount calculation, factoring and combination. Listening? 4 concepts, 4 problems I will take. More than enough for the exam. Working capital estimates, we will do 9 problems because those are extremely important for exam. Listening? Working capital management chapter will come in examination for 9 marks. How many marks? 9. But 9 will not come in one chapter. 4 marks to 5 marks will come in working capital estimates. Listening? Another 4 marks can come from debtors management or cash management. So, first target is practical questions in capital budgeting. But by the time we do practical questions, you should complete then come to the class. Listening? Once you complete practical questions here in this area, once you complete all these things, we will be going into the next area called as working capital management. In the 2 segments are very important for exam, those I will cover. Working capital estimates, debtors management. Listening? That's it. After that, you will be having a lot of time to practice. Every day, put 3 hours for FM, do some chapter and complete. Listening? This is the thing I wanted to tell. Okay? I'm closing here for today. Before